funding to crew selection. But as early as the 1980s, proposals for commercial space tourism began to emerge, along with innovative solutions for getting people there, such as the wild concept of sticking a 74-person passenger cabin in the cargo bay of a NASA space shuttle. Although various non-astronauts have been selected for missions over the years, true space tourism didn't happen until 2001, when an entrepreneur named Dennis Tito coughed up an estimated $20 million to hitch a ride with the Russian Federal Space Agency for a week-long vacation aboard the International Space Station. 20 years later, we're seeing a new contender in this final frontier of tourism: private companies.
It's becoming a private enterprise situation, still very high risk with a high reward, potential reward. But, government is really out of the business of flying people now, and it's really going to be companies like Elon Musk and Jeff Bezos and Richard Branson that do that heavy lifting. Commercial space tourism is usually about taking the non-astronaut, the private citizen, into an orbital or suborbital flight. So you get a short amount of microgravity experience, and you can float and take some photos. And then you come back. This was something that technology had gotten to a point where the private sector was going to make a business out of this. There are multiple companies that want to get to the place where they fly people into space.
The first of these is Blue Origin, founded in 2000 by Jeff Bezos. Using the autonomous rocket system New Shepard, a tribute to the first American in space, Blue Origin plans to launch up to 6 passengers at a time, offering a rarefied treat of 62-mile-high views and a momentary experience of weightlessness. Booking officially kicked off in May 2021, with the very first seat to be auctioned off for charity. Meanwhile, Richard Branson's Virgin Galactic has also been pursuing a viable form of suborbital tourism, aiming for a launch in 2022 once Sir Richard himself has taken a flight.
I'm hoping to be able to go to space. I'd love to be able to coincide it with the moon landing and go to space. So I've got the whip on the team, and we'll see how we go.
The company claims to have lined up over 600 seat reservations so far, including Justin Bieber and Leonardo DiCaprio. Virgin has projected that the final cost of the ticket will be at least $250,000, or roughly $50,000 for each of the 5 minutes or so of weightlessness that you'll get to experience. Although costly, both companies' offerings aim to make suborbital flight a regular form of adventure travel, eventually driving down costs at scale to expand the customer base beyond the orbit of celebrities and billionaires. The third major contender is Elon Musk's SpaceX, which has set its sights even higher on orbital flights, which are
a whole nother level of complexity and energy and danger. When you go suborbital, if you're just going to go up above the von Karman line, which is 100 kilometers or about 62 miles, you only need to get up to maybe 5,000 miles an hour to get up there, and you go basically straight up and then straight back down. You don't have the reentry heating that you would see coming in from an orbital. So when you go orbital, I don't care if you're a baseball or a battleship, you've got to go 17,500 miles per hour, not just 5,000 miles an hour. The energies involved are much greater. By doing that, SpaceX has gone another level up, and that's what they're doing with the Inspiration 4.
Visit inspiration4.com for your chance to go to space.
Inspiration 4 is the first planned all-civilian mission into orbit, slated to launch in late 2021. The crew will bring their own set of diverse perspectives and backgrounds and experiences to test how a group of different people, namely people who aren't professional astronauts, could fare in space.
Until now, astronauts have had to be physically perfect, and this mission is changing that. And so I feel incredibly honored to be representing those who aren't physically perfect. At age 10, I was diagnosed with bone cancer, and I was treated at St. Jude Children's Research Hospital. And I spent a year there undergoing intense chemo and also surgery that ultimately saved my leg. I now work at St. Jude as a PA, a physician assistant, and I work with leukemia and lymphoma patients. The kids we work with are so brave, and they are very excited to watch me go to space because this is showing them that, they're capable of doing this as well.
Haley, along with 3 other crew members, will spend 3 days in space, orbiting the Earth every 90 minutes before landing back off the coast of Florida.
Well, when you think about access, the first astronauts for the United States came from the test pilot side. And so women weren't allowed to be a part of that. We have somebody in their 20s, somebody in their 30s, somebody in their 40s, and somebody in their 50s. And so there can be access in all kinds of ways, whether you're talking about age, whether you're talking about gender, whether you're talking about race and ethnicity, and all of those things.
The first time, people are going up into space and not sent there by a superpower like the United States or Russia or China. Well, that's really significant. And you've got to be very thoughtful about it. The whole game plan right now is to make space really affordable and accessible for everybody, so that you can have fishing buddies going to space someday. But the first is special, and so with that, we wanted to have a crew selection process that could make space available to everyday people.
Getting to space is only the first step for space tourism. The next challenge is what to do and where to stay when you get there. Axiom Space is planning to launch the first segment of a new commercial space station in 2024. Their $2 billion project, called Ax Station, will become the first free-flying private international space station. Or, to use a more consumer-friendly term, a space hotel. Axiom isn't the only company out to make your space stay a little more comfortable. Bigelow Aerospace has been building what they call expandable habitat technology, like their B330, an inflatable pod module that expands once in orbit.
There's even one attached to the International Space Station right now they've been testing. And you take it up, and it's rather small, and then you inflate it, and it seems to be working very, very well. This is likely to be the first kind of tourist hotel that you're going to see up in space. First of all, it's easier to carry instead of this giant tin can with all of that. The inflatables are lighter. You just blow them up, and they get a nice big size for about less than half the weight, probably.
But even as space missions become accessible to civilians,
the risks of going into space are incredibly high. And you could die 1,000 ways that we can think of and 1,000 other ways that we can't think of.
This is Michelle Hanlon. She's a space lawyer at the Mississippi School of Law, focused on protecting humans in outer space.
Now, I'm not an attorney for any of the space tourists, so I haven't been privy to their private contracts. But I can tell you that the FAA requires certain waivers to be in those contracts. So, for example, the FAA says, well, we're not going to make you make your spacecraft to a certain safety level. We are going to make you, spacecraft operator, make sure that you inform your space tourists of all of the hazards that you know of. I imagine a very long waiver, all the ways you can die in space. And you have to understand that there's health risks, and you have to indemnify the US government if you are launching from the United States. So those are things that we know a space tourist has to sign and has to waive. So now let's go back and think about our space flight participants. The FAA calls space tourists space flight participants. They don't call them astronauts. Why is that important? If you're not an astronaut, there's no obligation to rescue you if something goes wrong. It's a lot of money to set up a rescue launch. If it can even be done, it's something really important to think about, and that difference as we cross this threshold from having astronauts in space to having real people like me in space.
And when we are able to make it to space reliably enough, there's still a host of other legal and ethical issues to consider before space tourism can truly take off.
There are so many gaps in space law that we are going to have to put in a lot of sort of basement ideas. And so, for example, the Outer Space Treaty is a treaty that offers principles and guidelines for state activities, for the activities of national governments. It doesn't talk about private entities. It doesn't talk about humans in space. So now if something goes wrong, so let's think about all the times hotels on Earth are sued, right? So slip and falls. You step on something in the bathroom, you sue the hotel, and it becomes a private lawsuit. Because of the vagaries of international law, if something happens in space, well, boy, you can sue the state that launched your spacecraft, you can sue the company that brought you there, you can sue the hotel, you can sue the individual, you can sue every government related to that, because the way the Outer Space Treaty and the Outer Space Regime have set this up is that anything that happens in space first has to go through a diplomatic channel before you think about suing in a court of law. And so every single slip and fall in a space hotel is a diplomatic nightmare. And so we really need to figure that out before we start sending a lot of people there. You think about human rights in space. Here, we don't think about a human right to oxygen because it's kind of all around us and free. It's not in a space hotel. So what happens if something happens and the oxygen depletes? Who gets the oxygen first? And then, of course, let's not even think about the labor. How do you treat your labor in a space hotel where that person may be there for 2 or 3 years without coming back to Earth? So a lot of things to think about.
Space habitats are more likely in the near future to focus on research missions and be a home for experiments that can't happen as easily back on Earth.
Space hotels, I think they garner a lot of headlines and a lot of news, but at the same time, that's not the first thing that you're going to see happen. They don't offer the compelling business case, I think, that you'll see from a place that wants to manufacture pharmaceuticals or a new type of crystal or some type of filament or fiber optic cables and other things that you can do in microgravity. The things that are actually, a high value finished good, when you get that back to Earth and you sell it for a very, very huge profit margin, that's what's likely to happen in space, as opposed to having a real estate platform that you sell to a tourist. A space hotel is really interesting, and it will probably happen, but it's not likely to be at the forefront of space commerce.
Even if space hotels are right around the corner, don't get too excited about booking a trip in one.
It's not a cheap ticket to ride to space, and it's going to be, millionaires and billionaires and that sort. But at the same time, the point was made that in the early days of airline trips, that was also a completely unaffordable ticket for most people. Those people who flew were people of means, and over time it becomes affordable to the masses. And I think that's the goal for all the entrepreneurs in space as well, to get those costs down to a point where it's not $10 million or $5 million or $300,000 ride into suborbital space, when it becomes more like buying a first-class ticket to go to Europe from the United States. So that's the goal, and the question is, can we get to that point?
Given the immense operating costs of getting to space, it may be years, if ever, until space tourism becomes a profitable venture for any of these companies. Virgin Galactic, the only publicly traded company of the three, has had a particularly rocky year, initially riding on the momentum of a SPAC deal, but more recently beset by launch delays and major funders, including Branson himself, selling large quantities of their stock in the company.
Space is really, really, really hard, and it's an absolute cliche, but it's one that happens to be very true. It's just really hard to do. That's also the reason that you've seen the delays that, Virgin had talked about flying years and years ago. And it became such a crazy point that Richard Branson actually stopped talking about it when he was asked, because it was never going to be when he predicted. But it's not insurmountable. And, investors have stepped up because this is something that is doable.
Despite the astronomical dangers and costs of getting to space, it may ultimately follow the course of other once fanciful modes of travel.
Wright brothers having, what was by modern standards a very unimpressive first flight, at Kitty Hawk. I mean, you had less than 20 years later, you had your first airborne ambulances being used to save lives. Fundamentally, the world is a more interesting place when people can go and dance among the stars and such.
The lure of space is innate. It's in our DNA. It's that exploration bug. We are an exploratory species, and we want to go out there and see what's out there.
That vision that I had in 1969 of seeing normal human beings travel into space, it's finally beginning to happen. When you get a bunch of people up there and they can all see it for themselves, that'll create even yet another revolution in how we treat our planet and the way we think about it.
So while 2001 came and went without quite looking like Stanley Kubrick's ultimate space fantasy, 2021 might finally be the year we're catching up.
if you visit California, you might be inclined to go to Disneyland, or jump in your convertible and take Highway 1 up the coast, or maybe make a pilgrimage to Yosemite. All very fine choices. But if you're the kind of person who revels in our planet's extremes, then it's Route 395 that you're after. This one glorious road will carry you from Death Valley's desert floor to sky-high views of Mount Whitney. You can see the 5,000-year-old bristlecone pines, the oldest living organisms. Or the bizarre tufa towers of Mono Lake. And true to California's boom and bust spirit, you can saunter around the ghost town of Bodie. What a novel experience to find an empty American city where all the businesses are shut down. To do 395 upright, it helps to have a guide, and mine is a man named Jan, and his crew, Heron,
Let's tidy up first.
and Lemmy, the hardest partying dog of all time. Jan agreed to show me some of what 395 has to offer, but only if we agreed not to disclose any locations.
My name is Jan Srostra. I'm an industrial designer out of LA, and I spend a lot of time camping and a lot of time in the Eastern Sierra. It's a place I love, and sometimes I'm known as 395 North because my Instagram account, and I don't like to be known as that, but I'm trying to use it to set a good example and do more with it than just social media.
Where did we end up camping? We got here late last night. I wasn't even sure where we are.
This is BLM land, right on the outskirts of National Forest, and it's one of my favorite places in the world. Basically, everything outdoors wrapped into one.
Yeah. Good thing about California, man.
Oh, man. We have so much national forest and public land that you can literally just cruise out and find a place to camp. It's ours.
What I wish was mine is Jan's sweet truck.
It's a 2019 Ford Ranger. Has about 200 watts of solar in it and a fridge, and has everything that an RV has except for a toilet, but just on a smaller, simple scale.
And you drive us around day to day in LA.
Yep.
And then just roll out when you want.
It's my daily driver. Handles great. And then when I'm done with work, I can just bail and go camping. So the camper basically has only what I need. Think of it as backpacking with a car.
Yeah.
The fridge has a couple compartments. This is just a kitchen box, stove, utensils, and a bunch of stuff. This one has just dry food. Then when you get inside, there's a bed. The bed flips up, so you've got tons of room in here. This awning is phenomenal. If you want to pull that over.
That's cool.
Let me just pop that up.
Sorted.
So, home on wheels.
Yeah.
This is my vacation house.
Dude, it's so nice, man. Even with his nomad lifestyle, Jan faces the same big question as the rest of us. Do the internet and smartphones have to ruin everything? When you find the super special, beautiful spots, is that you busting out a map and like looking where it might be cool to go, or is it word of mouth and just getting to know people, the locals? And
if I see a dirt road, I just want to go down it. So a lot of it's just aimless rambling. It's a desire to just see something. Check that out. For some reason, it's more fulfilling than getting a recommendation from somebody. Or there's tons of apps and websites now, road trip apps, camping apps. They've proliferated. The knowledge is accessible on the internet. I used to fight the geotags, and I would get really pissed off. I'd be like, why are you posting this place? It's gonna blow up, it's gonna get trashed. Now I've realized that you can't fight it. The internet has just shrunk the world. So we're not gonna stop it. We're not gonna stop people from going there. So I'm a lot more focused in conversation now with trying to set a good example. When you go, pick up your trash. When you're pooping out in the wilderness, don't leave your toilet paper on the top. You know, make sure you follow, good steps for leaving no trace.
As a thank you for this quick guide to pooping etiquette, we made Jan, Heron, and Lemmy some tacos. And we all took in the night sky and knocked back a couple of drinks. Take that, Apocalypse. The thing about good times and serenity in 2020 is that they're fleeting at best. After we split up from Jan and continued on our way, smoke started to envelop us. The plus side was that our RV no longer smelled like feet. The downside was breathing. My man David here suggested that we try and outflank the smoke by cutting through Yosemite. Without a reservation, we had to talk our way in.
Yes, no stopping, no getting out, and yeah, no problem. We just wanted to get through.
It was a beautiful choice. Glad we got out of the smoke. Whoa, okay. But not quite as effective as we had hoped. Fast forward 4 hours or so, and we had managed to trade the smoky majesty of Yosemite for the smoky, look at it, strip malls of the Central Valley. We have made it, sort of out of the smoke, all the way across Yosemite National Park and here to the gorgeous Central Valley of California. We're off to see a kind of surprising tech startup that is making some pretty strange machines to serve all the growers out in this region. And we're here in this near Fresno. This is California farm country, right?
We're just south of Fresno, a town called Kingsburg. So we're right in the Central Valley of California. Very, very large farming Valley here. It's kind of considered the breadbasket of the world.
The Central Valley stretches out over about 20,000 square miles, and the farmers here produce about 1/4 of the food that Americans eat, including a whole lot of fruits and nuts.
Tell me a little bit of the background of Gus. I know some of this is like a family business. The roots of this go back a ways. Tell me kind of like how we got to what's essentially like a startup, I guess.
Yeah, definitely. So the founder of our company is Dave Crinklaw, and he started the business back in 1982. He started with is basically with his dad was commercial spraying of trees and vineyards. Got to the point where our biggest challenge was labor, just the shortage of it, really. He was forced into innovating, and he had this idea for quite some time about doing a driverless sprayer, and it finally got to the point where he said, you know what, I either got to get out of this business or I'm going to innovate.
Organic or not, crops need to be sprayed, and this process has to take place a few times a year. This means hiring a lot of people to work long hours under serious pressure. And so, just like the tech bros to the north, Gus decided to solve all of its problems with robots.
On this like labor point, you guys have set this up where you can have somebody in a truck and that one person can monitor, I think like 8 of these.
In order to operate Gus, you have one guy or girl that sits in a pickup and they monitor from a laptop computer. So that person is basically just watching all the vehicles on the screen. They can monitor up to 8 of them at a time while they're out there spraying in the orchard. And so that user interface really provides them with all the information they need to make sure that the machines are safe and that they're doing the correct job. So it tells them what speed they're driving, the engine RPM, the amount of gallonage per acre that they're applying at any given time. So if any one of the machines has an issue, it's going to send an alert to that laptop.
Much like a self-driving car, these beasts use GPS, LiDAR, and cameras to see and navigate the world around them. They also rely on pre-built maps of the orchards for extra guidance. Gus builds the machines right here, and then takes them out for robot training on this orchard next door. It's here that the company learns if the machines will behave and do as their software and human masters command.
So this is kind of like this is a test orchard where you guys put it through the paces and work on the technology?
Yeah, so this is our test orchard right here. It's right by our building, as you can see in the background. So every new machine, as it comes off the assembly line, it's put through a commissioning test right here. We test all the sensors on the machine, autonomous computer, all the safety systems, make sure it's doing what it's doing prior to when it's delivered to a customer.
So what's it doing now?
So right now he's doing a test spray. So he's just turning the water on to make sure that the system comes up to pressure, spraying water out of the nozzles just to make sure it's all functioning properly.
Okay. It's got like a crazy turbine at the back, or?
Yeah, so it's basically just a big fan.
Okay.
And that fan's driven off of the Cummins diesel motor, and it just basically creates a big airflow.
Gus is already selling these vehicles to brave modern farmers. And people the world over have taken notice of its machines.
And have you just sold them in the Central Valley or like throughout the U.S. or even overseas, or where are they going?
Yeah, so right now the majority of our machines are here in California in the Central Valley. However, we do have machines and customers in Florida, in the citrus industry over there, as well as Australia.
And I think you started selling them in like December of 2019?
Yeah, so we started taking orders early last year for the sprayers, and the first deliveries we made were in December of 2019.
Okay, so. And how much do they cost each?
So our retail price on these machines is $285,000.
So it's not a small investment, but I'm sure the regular sprayers aren't cheap
Yeah,
either.
I mean, we're honestly not too far away from conventional equipment on our price, and the main thing is that the return on investment is very, very quick due to all the labor savings and the increased efficiency. I mean, these machines, they just drive. But basically what we're doing, besides this machine, this is our first machine. We call it Orchard Gus, mainly designed for your nut trees, as well as citrus and fruit In the future, we're working on a few other projects. We're going to do more machines. One of them is actually a vineyard sprayer. So vineyards are much tighter spacing, so the machine has to be physically smaller. And then we've got our eyes on doing a lot of other innovating.
That right there, friends, is a Central Valley farmer putting his whole fruit basket on the table. Gary's TED Talk can't be far off. And with that, it was time to get back in the RV and to confront what happens when three men are bested by their own failings and the forces of entropy. Next on Hello World, we cruise into the Mojave Desert in search of a lunar lander.
We have instruments that we are going to deliver to the South Pole of the Moon in December of 2022. Instruments that are trying to scan the surface of the moon.
And hang with a test pilot who walked away from this.
Meet Betty. She lives by herself, but for the last few months, she hasn't been alone.
LQ, tell me a joke.
Did you hear about the claustrophobic astronaut?
No.
Apparently, he just needed a little space.
Most technology isn't made for 93-year-olds. But this woman is making sure that this particular robot is.
LQ, who are you?
She's researching the way we interact with machines. And if she has her way, robots will soon be a trusty companion for all of us.
My name is LQ. How can I help you?
As technology replaces old jobs, it's also creating new ones. I'm Aki Ito, and I'm here to show you the jobs of the future.
My name is Danielle Ishak, and I am a human-robot interaction researcher. It's really hard to intuitively design a robot meant for a consumer audience. You have to make sure that it's a robot that people want, people know how to use, and people value.
Danielle works for an Israeli startup called Intuition Robotics. Its U.S. office is here in downtown San Francisco.
Hello?
Hey Danielle, it's Aki.
Come on in.
The company is funded by a couple big names like Samsung and Toyota. Full disclosure, Bloomberg's venture capital arm is an investor too.
This is LEQ.
Can I take her out for a spin?
Please.
LEQ, tell me what you can do.
I am a proactive social robot designed for older adults. I can connect you to your family and friends, and even play music.
These features might remind you of the Amazon Echo, but you'd be missing the point if you compared her to a smart speaker. She's not meant to just be useful. She's meant to be a companion.
Why don't you take a break and have a drink?
And that's why she has a head that can nod and make other subtle gestures you might expect from a pet.
Through our research with older adults, we're finding that almost on a daily basis, we see that somebody tells her that they love her.
Really?
Or that they like her. Or that they miss
Literally,
her.
I love you?
Mm-hmm. They'll also tell her, I'm depressed, or I'm lonely. They'll open up to her in a way that they might not necessarily open up to a human because they don't feel like they'll be judged.
LEQ isn't on sale yet. but a prototype is already in the homes of about a dozen early testers who live in the Bay Area.
LQ, tell me what the weather is today.
Danielle's job is to figure out what's working and what's not.
Sorry, please rephrase your request.
And she does that by visiting each of her testers twice a month.
How important are these visits to your job?
They're critical. We're building a product for
Connection
people
lost.
we are not. I'm not a senior, and how could you know how to design for somebody if you don't do research? Because otherwise, you would just be designing in the dark.
Jobs like Danielle's are just starting to emerge. Until recently, robots were mostly in factories, separated from humans. But now, they're finally getting cheap enough, small enough, and smart enough to be in our homes. This has created a whole new challenge of designing robots that people will actually want to interact with. And that's where Danielle comes in. Her research has helped shape every little facet of LEQ, from the way LEQ moves to the way she talks.
It's a very special job, and it can be really hard, and it can be really frustrating, but at the end of the day, it's incredibly rewarding. And I think the most rewarding part about it is when I see the joy on the users' faces, like that they saw their feedback turned into something real.
Today, we've driven east of San Francisco to go see one of Danielle's research participants.
LQ, tell me something interesting.
Did you know that Ronald Reagan was a lifeguard in high school and saved 77 people's lives?
Now, see, this is where a conversation is. She should open up and I should say, no, I did not know that. I expect her to be able to continue a conversation for at least a couple of comments.
Yeah. And why is that?
Why?
Yeah.
Because that's companionship.
When Betty was around Danielle's age, she was working with some of history's very first computers.
When I was finishing up my master's degree, I was working at Harvard in the computer lab when they were building Mark IV. A large room-sized computer. But now, this artificial intelligence stuff is amazing. LQ?
Yes?
Schedule a doctor's appointment.
No problem. I'm working on it.
When Danielle brought along the idea of working with robotics for the elderly, I said, are you kidding me? Will older people connect to a robot? And she said, I don't know, let's research and find out.
Danielle grew up here in this suburb of Atlanta. Her parents spent much of their childhoods in Israel and met in the US.
We as immigrants, we understood that we might need to work a little harder. In fact, I feel that rather than taken away from Danielle, it gave her so much more, because she understood the fact that you need to run after your dreams and work really hard no matter what the challenges are.
School didn't come easily for Danielle.
I have dyslexia, and that very much affected my self-esteem academically.
The principal of the school did not recommend her to take advanced classes. She fought for it, and she got into it, and she did very well with them, too.
Danielle's first job out of grad school was at X, the secretive research facility founded by Google. It's known for dreaming up all kinds of wacky, far-flung ideas.
Can you tell us about the moonshots you worked on?
No, I can't tell you too much about the projects that I worked on. I can say that I was working on robotics.
She loved the job, but wanted to work on something that would reach real consumers sooner. So she left X after a year and joined Intuition Robotics. She's been working in the field for 4 years now, and it took her a while to find her footing in a male-dominated industry.
I've gone to different meetups where there'll be like a circle of men with their like zip-up jacket with their like company logo on it and a beer in their hand. And I'll come in with lipstick and nobody wants to talk to me. This is my closet.
So at first she did her best to fit in, wearing a pair of glasses she didn't need and toning down her style.
So what's the kind of thing you used to wear to a conference?
Stuff like this, blousey things that make you look like you're 40.
But that got old after a while.
And what's the kind of thing you wear now?
Now it's like I just enjoy being kind of expressive and playful in what I wear.
Before we wrap up for the day, Danielle has one more LEQ tester to visit. Joseph is 97. And he's had the robot in his home for 8 months.
How are you?
I'm fine. How are you?
Good. How has Miss LEQ been?
She always tells me to take a drink of water, at least 4 times a day.
So, we added a whole bunch of new facts to LEQ.
Did you know that a cup of chopped red bell pepper contains more vitamin C than an orange?
Okay. What did you think of that?
Certainly, the print was, I could see that quite clearly.
What about this?
Well, I can see that. LEQ, play music.
No problem. It will begin shortly.
By 2050, almost 500 million people are going to be 80 or older. And if current trends continue, more and more are going to be like Joseph and Betty, living alone.
LEQ, stop.
Today, both of them are doing okay. But some of Danielle's other participants have been struggling.
Is it kind of hard to leave them at the end of the day?
It is. Some of our testers are pretty advanced in the stages of depression through loneliness and isolation. And at times, I know that LEQ is cheering them up in their day, but I know that it's only part of the way. No source of artificial intelligence robots will ever be able to replace humans and human companionship or human care.
The key to Danielle's work is to embrace that very limitation of machines.
Robots should help humans do what they love, help humans interact with more humans, help humans in general. Not pull humans away from humans, not take humans' jobs and leave humans without purpose.
Whether it's in our workplaces or in our homes, robots are soon going to be everywhere. And it's up to Danielle to make sure this robot-filled future leaves us just a little better off.
So don't be afraid. And if you are afraid, come and join us, because I promise it's a friendly place.
Times are tough. Jobs are scarce. It's risky to be outside and around others. Seems like there's very few ways to make extra money during a pandemic. So I guess I'll just hunker down and binge social media until this all blows over. Wait, don't these people make money? How do these people make money? Streamers, YouTubers, Twitch stars. How do they make money? Is it a lot? Is it a lot of work? I know, I gotta ask somebody in the biz, and I got just the guy. Austin John Plays.
This is your full-time job now, right?
As of November of last year, yes. This was always just kind of like a side thing. Like any money that I made from doing my videos and whatever else, I never touched that because I didn't really think of that as being like real money. And then it started coming in more and more. And then it was like I hit my first day that I broke $1,000 and I was like, this is actually going to be money.
How did the YouTube channel come to be?
When the game Pokemon Sun and Moon came out for the 3DS, there was like things that I learned about the game, and then I wanted to just share that information with people. And at the time, I didn't have any way to capture a screen or anything, so I found like generic footage, and I kind of put it all together with so much editing. And that video got 6 views. And then 2 days later, I made another one, and that one got 12 views. And then I just started pumping out more and more content, and people were like, this guy knows what he's talking about. It really just started building on top of itself, and then it was like, my channel really focuses on tips and tricks. So I play a straight 18 hours, and I'll finish the game or get to about the 40-hour mark, and then I'll make my first video. While I'm going through, I have a giant notepad and just scribbles everywhere, and I make these notes of like the things that stumped me, so I know the things that may stump other people.
What do you need to think about if you're building your YouTube channel? 1,
You need to do something that you're passionate about. Not that you like, not that you think you're gonna make money on, something you're passionate about. The other thing is something that other people are passionate about. It holds a special place to them. And third is, it needs to be something that people are gonna seek out information on. In order to enter into the marketplace, you either need to be better than everyone else, you either need to be faster than everyone else, or you need to be more accessible than everyone else. And you can't be more accessible because it's already on the platform. Granted, if you understand how the algorithm works, which is very similar to Google Analytics, then yeah, you can have a little bit of a head start. But if you're not doing it faster, and if you're not doing it better than everyone else, then why should anyone watch your channel? So my income as a YouTuber kind of breaks down to 3 different ways. One, which is the bulk of it, which is ad revenue. Whenever you go and you watch a video and then there's an ad and then you wait 5 seconds and you hit the bottom right corner and then you go on to the next video, or a non-skippable ad, or the video starts immediately, you get the little banner ad at the bottom, or if you scroll down from the video, the first thing that shows there is an ad. Those are the 4 different types of ads that can appear on every single YouTube video. And all of them pay a certain amount. It varies on lots of things, like the country of the person who posts it, the country of the person who watches it, the time of year, where you are in the quarter, if there's anything going on with a reduction in ad revenue. Like, great example, COVID-19, companies weren't spending as much on advertising. So because of that, CPM went down. CPM stands for click per thousand. I'm using the Roman numeral for 1,000. And that means that for every 1,000 views, you get a certain amount of money. Now, on low ads, when I first started off, my CPM was 30 cents. So every 1,000 views, I made 30 cents. But then once I signed with an MCN and I started making more quality content and more engaging content, some of my better videos and certain times of the year, I can see CPMs as high as $12 to $14. And there's a big fluctuation between, you know, if I post a video when there's no ads being spent, like January and February, that's the reason a lot of your favorite YouTubers and also TV shows don't post new videos in that time of year, because ad rates are down. Why are they going to make content then? Instead, you're recording and you're bulking up for when ad revenue is higher. The second way that a YouTuber makes income is support, crowdfunding, things like that. When I first started off, Patreon was really the only option, but then they started rolling out supporters and members for YouTube channels. So Whenever I have a live stream, you can click a button and then you can become a member, and then you get special icons next to your name. I believe they're called badges. Or on any video, you can hit the join button, and that helps support the channel. And then the third aspect of that would be merch. And for me, my merch has been somewhat basic. In fact, I'm wearing one of my t-shirts from last year right now. You have to endure the times that your first video gets 6 views, that you post it on Reddit and they say, shut up, and then an auto mod bans you. You have to go through that, because until you go through that and you discover why you're doing it, you're not doing it for other people, you're doing it for yourself. If you're not loving what you do, then it's not worth it.
Huh. So make a channel about something that I'm passionate about. Oh, sweet. I guess I can make the channel about that. Now, how do I grow an audience? How do I get popular?
It's all about diversification, right? You have to have a massive Twitter following. You have to have a massive Instagram following. You have to have a massive YouTube following. Of course, you have to be on Twitch, which is the key platform. But basically, any way you can get in front of your audience, you can engage with your audience, is going to drive those clicks, which ultimately drives the advertiser revenue that you get back from all of these platforms.
It's me and Dan playing video games and talking in a funny manner over them.
They're not just people who are good at games, they're actually people who are good at online engagement, online entertainment, first and foremost.
You have the right to remain stylish. Anything you wear can and will be used against you in the court of fashion.
The streamer is either very, very talented at the game. The best player in the game is generally going to draw a crowd because people like watching people who are very good. On the other hand, they're either very, very good or funny, charismatic, whatever it is on that side. Funny, charismatic, whatever it is on that side.
Oh, no.
You know, it becomes more of a show where they talk about other things outside of the gaming world, and gaming becomes really just a backdrop and an excuse to engage with that audience.
There were those weird, like, Ronald McDonald, like, straight to VHS movies. You remember those?
I'm personable, I'm chatty. I would kind of, you know, when boring things were happening in the game, I would ramble on about, you know, movies I'd watched or books I'd read and, you know, or conversations I'd had and stuff like that. And so I think being personable was a big part of that.
It's not just getting on and playing games. It's getting on and being an entertainer. You are putting on a show.
All right, now let me go ahead and grab the samurai sword that every gym has. Okay, he's dead.
To have a larger audience and to have that audience, I think, stay with you, you have to bring something extra. You know, you have to find your niche. You have to find what works and what connects with the audience and what makes them laugh and what makes them keep coming back.
You gotta make it a little more exciting, all right? Throw in a hanging bishop. Have everybody in suspense for a moment.
I think the real most important thing is to just get used to being on camera. Like in any sort of performance thing, is get used to talking on camera. You know, my first few videos were terrible, but because I sat down and did it for 6 to 8 hours a day, I just got used to talking and I got over that uncomfortable hump.
If you go into Twitch purely with the expectation that you're going to make money, make a job out of it, have all this growth, and it's going to be great, you're probably going to burn out prior to getting to that point because there's very little payoff for a long time, right? Like multiple years generally before you really start to see a payoff. And so, you know, those first few times you're streaming, nobody is there. One person shows up every 30 minutes, says hi, maybe, and leaves, right? Like, it's very discouraging, I think, for a lot of people. And so you have to be there just loving it. You have to love talking to yourself when nobody is around. You have to love just the game that you're playing, all of that stuff, because it takes a while. And I think a majority of people burn out prior to getting to the, like, profitable point of it.
And there you have it. My very own YouTube, Twitch, Discord, and streaming channels all ready to go live. It's a veritable social media ecosystem just on the verge of thriving. So, don't forget to smash like and subscribe, and visit my Patreon for perks. Also, go to my merch page. And one last thing, stay cool, my friends.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And very good afternoon, everybody. It is Wednesday, April 12, 2023, live in the Bloomberg Interactive Brokers studio, streaming on YouTube and Bloomberg Quick Take. I'm Carol Masser. Tim, as you know, on leave. With us once again, Bloomberg Quick Take correspondent Madison Mills. And, you know, Maddie, I feel like there's kind of bookends when it comes to the equity trade and also the Treasury trade because we've got this tight trading range.
And we've had such a huge day of data news, right? We had CPI this morning. I thought that was going to be the big deal. And then, whoops, hit by the Fed minutes in the afternoon.
We've got a great roundtable coming up on that. Our Mike McKee and Molly Smith. So we're going to break it down and also that Fed speak because there's some divergence there. We're also going to talk about the phantom drop in U.S. bank lending. Again, another key metric when it comes to trying to figure out, should we be nervous about what's to come?
And speaking of being nervous, airline stocks, massive nosedive. Should I say turbulence, Carol?
Dun, dun, dun,
Dun, dun. Hey.
You went there.
Oh,
hey,
God.
listen, what I'm confused about is I thought everybody was flying, so...
I know, what's happening? The
All right.
consumer suddenly not so resilient, I guess.
We're going to talk to our George Ferguson of Bloomberg Intelligence. We're also going to talk Buffett on BYD, TSMC, and bank failures. And then we've got the two key metrics coming up when we get those big bank earnings, something you need to keep on your radar.
And another thing, we got to do our daily Elon Musk check, the latest twists and turns with Twitter, because it just never stops coming.
I know. It's the story and the individual who keeps on giving. Also, we're going to get into the IRS's Army veterans with some juicy tidbits on that one. And then we've got the Chief People and Impact Officer at Cotopaxi. I recently ran into her at a dinner earlier this year, so we'll get an update on what they're doing.
So cool. I can't wait for that. And we're going to end tapping into neuro and cognitive sciences to get our best and innovative ideas.
It's like kind of out there.
I love it.
I
Let's
do
get
too.
woo-woo at the end of the show. I love it.
I love getting woo-woo. That's what we're going to do. Having said that, we're looking at a market that's off its best levels, slightly higher on the Dow Jones Industrial Average, a little lower, almost unchanged on the S&P, and just down about 0.5% on the NASDAQ. But we're going to get into the equity and the bond trade. Right now, we're heading over to our TV colleagues, our simulcast, Countdown to the Close. It starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes left here in the trading session. Romaine Bostic alongside Katie Greifeld, joined right now by our colleagues Carol Masser and Madison Mills. Welcome to our audiences across Bloomberg Television, Radio Originals, and those folks streaming on YouTube.
Romaine, that's Maddie. Just thought I'd introduce you.
Hey, Romaine. I missed you too yesterday.
I never forget. I
Always
never
on my
forget.
mind, Maddie, not like that other person.
Jess Menton, wherever you are.
Jess,
Yeah.
We love you, Jess.
All right, go ahead. I interrupted.
Well, I was just going to say, we were talking all day long, of course, about the CPI print, which I'm not really sure cleared up anything. I mean, there there was something in there for everybody, but the consensus seems to be that there really is nothing there to make the Fed say we're not going to do anything more.
You know, it's really clear. We're going to continue to debate like where inflation's going and what the Fed's going to do. I mean, that's the only thing I feel like I got clarity on. Having said that, some clarity to some extent when you look at the cloud area, those stocks, some outperformance there specifically. Remember yesterday they were under pressure. UBS highlighting some concerns over Microsoft's Azure cloud computing business.
Is that David Bowie and Queen? Yeah.
Anyway, that was yesterday, a bit of a different trade today. So they sold off yesterday. Datadog, it is up about 4% here, topping the S&P 500. CrowdStrike, by the way, also an outperformer. Snowflake's up about 0.9%. You've got Cloudflare. It is also up about 3.8%, 3.7%. Microsoft, which was the subject of that UPS report, which saw some selling yesterday, down about 2.3%, now up about 0.7%, Maddie.
Well, I also want to look at that CPI data from this morning. If you look at this chart in the red line here, you can see where the Fed started to hike interest rates. You see unemployment and CPI both going down in the same direction, cooling since the Fed started that rate hike. That's not supposed to happen, right? It's not matching up with the Fed's forecast. So the big question is there a danger of a huge spike in unemployment following more Fed rate hikes?
Yeah.
And how does the potential credit crunch impact that equation?
I think everyone is scratching their heads coming out of this report, and you really see all that reflected in the price action on the major indices here, which have been oscillating between gains and losses for a good portion of the day. As we stand right now, an S&P 500 relatively unchanged after being up pretty significantly on the day. Similar story right now for the NASDAQ, the Russell 2000, as well as Dow Transports, all moving into the red as we get closer to these closing bells. Dow Industrials, one of the few bright spots here on the day, higher by about 0.1%, largely on the back of some big moves by Dow, Merck, and Goldman.
A definite shift in risk sentiment if you take a look at the sector level. Right now, you have 5 sectors in the green, 6 in the red. You look at what's doing well. It's energy up about 0.4%, as to are the industrials, material, and healthcare also getting a bit of a bid there. Then you look to the downside. It's consumer discretionary leading losses. They're off by almost a full percent. This is interesting. Communication services and big tech also following down today. And this has really been the story of the week, it feels like, Romaine. The fact that tech has been the underperformer after a really serious string of outperformance.
Yeah, you're definitely seeing that. You're actually seeing that in some of the ADRs of the Chinese stocks there. That was a big mover here. And we came into this morning, JD.com down, Alibaba down about 6% here on the day. And of course, all the talk right now about the airlines. Interesting warning coming out of American Airlines. Those shares down almost 10% on the day. We get Delta Airlines reporting tomorrow morning, so it'll be interesting to see if they ratify what we heard out of American. Remember, Delta and a few others have effectively pre-announced some of their numbers already, so we have a sense here of what we're going to get. Whether it's going to be worse than that still remains to be seen. Peloton shares down about 10% here on the day. We were just speaking with Lucy Shank over at Morgan Stanley, who flagged some interesting data when it comes to the number of people going to the website on Peloton and how that traffic is actually down there, and just still some M&A activity out there. Triton International up by about 32% here on the day. I do want to turn to valuations in the broader market. Valuations, at least by one metric, still relatively elevated, above the 20-year average here. The current PE on the S&P 500 still sitting right around 18.8 to be precise here. But if you look at the individual stocks here, something like 290 members in the S&P 500, you're paying at least 20 times earnings if you want to buy any of those individual names.
Yeah, great perspective, right? We talk so much about valuations, kind of where they should be, and that's a great metric in terms of, perhaps being still overvalued. Having said that, I feel like we try to glean, from the Fed speak about kind of what comes next, which plays into those valuations. Mary Daly, president of the San Francisco Fed, weighing in terms of interest rate hikes, but I feel like she's maybe a little bit more dovish. She's not a voting member. She said earlier in some remarks in Utah, but I do feel like her comments played to a little bit of fence sitting, if you will. Here's what she had to say.
Looking ahead, there are good reasons to think that policy may have to tighten more to bring inflation down. But there are also good reasons to think that the economy may continue to slow, even without additional policy adjustments.
Again, that's Mary Daly, president of the San Francisco Fed, earlier in some remarks in Utah. But, you know, it's kind of interesting. We are seeing, Katie, right, some divergence among some of the Fed members about what the Fed needs to do next. Some say maybe we could be a little patient, wait to see. Some are saying, nope, we got to continue raising rates. Mary Daly kind of giving you a little bit of both.
Maybe some divergence in their public comments, but then you take a look at the minutes, which dropped a little more than an hour ago. I thought it was really interesting. No dissents at all. Everyone backed hiking last month, and it had kind of been a will they, won't they sort of vibe on the street, and yet everyone agreed that they needed to raise rates at least at that meeting. Then you spin it forward, Fed staff projecting a mild recession starting later in 2023. I don't know, guys.
Didn't
I'm
they
still
get lost in the
digesting that.
sauce? Didn't they get, where did that come from?
What do you mean, the headline?
Yeah, no, about recession, right? I feel like we didn't really get a lot of that.
46 word count in the FOMC minutes on the word recession, or was it banking?
No, well, it was banking. But, I mean, when we talk about recession, I mean, I thought it was interesting that they drew a direct line from the banking issues to their outlook for a recession. And I think that's interesting because we talk about this issue of what constitutes contagion. We're not necessarily just talking about other banks collapsing. We're talking about a potential retrenchment in banking activity and as a result, economic activity. And I'm just kind of reading in between the lines, but that appears to be what the staff members, we should point out, those are the staff members predicting that recession, seem to be focusing on.
And what I mean, Katie, too, is like, got the headline, but I just mean it feels like it got lost in the conversation, like after the last Fed meeting.
Not in our conversation.
You don't
I mean,
really?
well, not with you, but on the television side. I don't know what you guys do on radio.
Anything.
You talked about what the other Fed members, the Fed staff were saying?
We talk about it all.
Do you
the
remember?
time.
Let's pull the tape. Can we pull the tape?
Pull the tape up.
All right, guys, we're going to be back in less than an hour's time. We're a little feisty on this Wednesday. We'll be back on radio, TV, YouTube, and Bloomberg Originals.
By we, she meant Carol, right?
Yeah, that's fair. Beyond the Bell. Join us at 4 p.m. Little by little, we are, parsing over all of the data, including the inflation numbers this morning, core inflation just slowing only a bit, little by little. We also did get those FOMC minutes, which we just talked about with our TV colleagues. We've got a little bit of diversion among the Fed officials, so let's get to it. We've got a great duo to kind of make some conclusions, some clarity for us all. Let's, first of all, we're going to bring in from D.C., that, of course, where the IMF and World Bank have been holding their spring meetings. That's where we find our Bloomberg News International Economics and Policy correspondent, Michael McKee, on Zoom in the nation's capital. And then right here in our Bloomberg Interactive Brokers studio, we've got Bloomberg News Economics editor, Molly Smith. Hey, Mike, I want to kick it off with you. What was more important to you, inflation numbers or the FOMC minutes, or a little bit of both?
Well, I think the inflation numbers are the most important because even though they were a month ago, they were March numbers, they're a little more contemporaneous than the meeting, which was at the beginning of March. And the banking system seems to have calmed down quite a bit. And when you read the minutes, the big concern was whether there would be some sort of fallout or spillover from what had already happened. And so the inflation numbers are reasonably good and tell us the Fed sort of remains on track, particularly if you subtract housing from the numbers, and we expect housing to start going down fairly rapidly, fairly soon. So the Fed can say we're on the right track. I don't think either one changes the outlook for a May 3rd rate increase. And we probably can't even speculate too much about what happens after that until we see the data up to that point.
Well, Molly, let's bring you into the conversation because I know we're going to talk to you a little bit about the rental and mortgage space, but just on these Fed minutes, what's standing out to you most?
Yeah, I mean, I didn't really see a ton of surprises in there. I think largely the situation is, I mean, in some ways, it honestly hasn't changed a lot from when the Fed met. That, like Mike just said, it seems like the crisis is fairly well contained, and that We already knew that there were no dissents. Everybody was in agreement for that 25 basis point rate hike back in March, and that they're going to look at the data going forward to assess how much further the banking stress weighs on the economy and determining their next move. So in that case, I feel like that was largely the story in March, and it's still the story now.
Mike, how does this square with some of the conversations you've been having with Fed officials and presidents of Fed banks, and also with what you're hearing down in Washington among those IMF and World Bank meetings? Is there more of a negative tone down there, or how do you kind of make sense of it all?
I'd say the tone has shifted a little bit to a little more cautious optimism, in the sense that the Fed has raised rates so much, and with progress apparently in inflation, the feeling is that they can probably back off fairly soon. You've got two camps in the Fed, those who want to raise rates and pause, and those who want to raise rates and take a look around and see whether they need to pause. So there's still a possibility of further moves, but the general feeling is they're close to the end of that. Then we move into a different kind of regime for the economy, where we have high rates, but they're not going up anymore. So people can plan or make decisions a little more easily on what they want to spend. So in the sense that maybe inflation has turned the corner and is going down, leaving open the question of whether the Fed's gone too far and there's a recession, but at least we're coming to a tipping point now where the Fed will be done.
Are we hearing recession more? It's funny, I'm watching Bloomberg TV, and they've got a guest on who says mild recession is the base case, and then we got the Fed FOMC minutes. Fed staff projected mild recession starting later in 2023. Mike, was that new, or was that more context? I felt like that was kind of a little bit new.
It was new that the Fed staff actually changed their forecast from subdued growth to a mild recession. It's the first time we've heard anybody at the Fed concede that we could have a recession. And I think that is sort of the base case for most people. It's going to be interesting on Friday to see consumer spending numbers, because we've gotten some initial reads on credit card spends from Barclays, from Bank of America, that suggests consumers pulled way back during the month of March. If that's the case, then that'll raise some more recession fears. But the general feeling is we haven't had the entirety of the Fed's rate increases hit the markets yet, or hit the economy yet, particularly on the business side. So if businesses start to pull back on investment, then we will see a recession ahead.
And just building on that quickly, Mike, Carol asked to your point of, was this new on the recession language? The language itself was new, but if you remember back in that March meeting when we got the summary of economic projections, it did imply that the Fed officials were forecasting a recession, but no one had actually individually said that's what they were projecting.
Okay, so for it to kind of come out here, because that's what I felt like I was trying to get a feel of what was new. Yeah. I think about the activity, and what causes us to do things and not. And Molly, you've got a couple stories out on the terminal, but one specifically that Maddie highlighted, on our call this morning about what's going on with mortgage rates, because housing is a big kick to the economy, or can be a big drag to the economy.
Right. So something that's happened because of all of the stress that we've seen in the banking system is that people are rushing to buy treasuries, a bid for safety kind of move here, and that's been pushing yields down generally since March. So that feeds into how mortgage rates are calculated. So mortgage rates have now fallen for 5 weeks in a row, and that's now starting to help up a little bit of demand for housing.
To what extent is that actually going to cool demand for housing, though, or change the equation? Because borrowing costs are still pretty high, right?
Yeah, exactly. So it's coming down at the margins here a bit.
Should we say more normal?
Right. Like, are we on the path to normal? Is basically what I'm asking.
I don't know. What do you say is normal?
But what is it that gets somebody off the fence to actually go out and say, okay, I'm going to go buy a house?
Sure. I mean, a mortgage at 6.3 versus 6.8 sounds a lot better to me.
And
if I was buying a house.
refinancing also? Are people refinancing already?
Less so. Definitely less so on that front. More so on the, I think this affects more people who purchasing a home as if you probably don't have one right now. If you already have a home, you've probably had one for maybe a couple years by now, at which you would have refinanced back when mortgage rates were in the 2% area, not now at north of 6%.
I have a sister-in-law who works in mortgages and refinancing, and it's been quiet. It's been really quiet. Mike, come on in on it, because housing, obviously important part, shelter, important part in terms of shelter. How are you thinking about that potentially, lower mortgage rates might impact that component in the future?
They're going to have to go down a lot further to make anything move. I think, picking up on Molly's point, people own their houses, and they generally, for the most part, have interest rates, mortgage rates, 3% maybe or below. So why do they want to go buy a house and pay 6.3 or even higher right now? They'd prefer to wait, which means that there is a glut of there is a shortage, rather, of homes on the market, which makes it harder for first-time home buyers to find something, and it keeps prices elevated. So the mortgage and housing market is kind of stuck at the moment until the Fed starts cutting rates more.
So is the Fed concerned about some of the housing data and the lack of cooling that we might be seeing in the housing data? I know that, Powell's obsessed with core CPI X housing. Like, which data point do you think Powell is staying up at night freaking out about, Molly?
Oof. He's got a lot of things keeping him up at night, I would think.
Debt ceiling, banking crisis.
Yeah, I mean,
poison.
I think, just going by what, what he really seems to stress in all these press conferences, it still is that core services X housing number, which is coming down a little bit, but definitely still way too hot for what they'd like to see. I mean, it was a good look, at least in the CPI today, and that was again looking at March data, that the shelter components did cool quite notably. So that is a good side when you are keeping shelter in the mix, but it's still got to come down a lot more. It's still by far the biggest contributor to the overall advance we're seeing.
All right, so Mike, May 3rd is the next FOMC meeting. As you said, and I feel like we're hearing from a lot of folks, we should probably expect the Fed to go one more, maybe rate increase of maybe 25 basis point. But is it fair to say that we don't know until we know? In other words, the Fed looks at kind of the data right in front of them as they make that decision.
Yeah, essentially the week before, you can look at what the data we have is and recognize that they're all calling each other and they're talking about what they think they should do. And so that's about the time period when they'll be making the decision. I talked to Jim Bullard a couple of weeks ago, and he said, why would I want to make a decision until I absolutely have to in this economy?
Fair.
And I think that's kind of the attitude that they all have at this point.
Molly, what is the single most important data point for the Fed that we're going to see before that next meeting?
I gotta say PCE for them. That's their preferred inflation gauge. So as much as the public looks more at CPI, what we got today, the Fed bases their inflation forecast on the personal consumptions expenditures index. So that's later this month. Another big one, a close second, would be the employment cost index. So that's a quarterly report looking at compensation, other wage pressures.
Right.
So that's, I would say those are the top two between now and May 3rd.
Yeah, we've talked a lot. I know Mike has talked a lot with Fed presidents about the wage pressures and the wage inflation. Guys, thank you so much. Michael McKee, International Economics and Policy Correspondent at Bloomberg News out there in Washington, D.C. Molly Smith, Economics Editor at Bloomberg News here in our Interactive Broker studio. Be sure to check out Molly's other story. She's got a few on the Bloomberg today, but one about the phantom drop in U.S. bank lending. I feel like this component so important as we get ready for those big bank earnings come Friday. So be sure to go to Bloomberg.com and check it out. This is Bloomberg Radio.
developments, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. Traders and asset managers are at odds over chances of a 2023 rate cut. We have got the Dow, the S&P, and NASDAQ all in the red. The S&P right now just about the lows of the day, down 15 points, drop there of 0.4%. The Dow down 45, a decline of 0.1%. NASDAQ lower by 87 now, drop there of 0.7%. 10-year yield at 3.40%, with the 2-year 3.96%. Gold up 0.7%, 2017 the ounce, and West Texas Intermediate crude up 2.2%. WTI at 83.34 a barrel. So where does today's CPI report leave the Federal Reserve? Mona Mahajan is senior investment strategist at Edward Jones.
We think they have one more rate hike left in them in May. And keep in mind, in their dot plot back in March, they indicated a 5.1% terminal rate. That does implicitly imply perhaps one more rate hike ahead of them. And keep in mind, the market is also giving them one rate hike. Despite somewhat better inflation numbers this morning, we are still seeing about a 65% probability in markets for that May 25 basis point rate hike. So we think one more rate hike.
Shares of American Airlines Group down 9.5%. The stock is sinking after the carrier said its first quarter profit will likely fall short of Wall Street estimates. Recapping just about the lows of the day on the S&P, down now by 15 points, down 0.4%. And that is a Bloomberg Business Flash.
Thank you so much. Charlie Pellet's setting us up on our next guest because we do want to talk a little bit more about what's going on in those airline names. As Charlie mentioned, stock under pressure, or the group, I should say, under pressure, down about 4.5% here, so just off their lows of the day. Thank you, American Airlines, right, Maddie?
I mean, always thank you to American Airlines, but especially for giving us this really interesting story on potential forecast for airline earnings as they come up in the weeks to come. Watching the space on our Bloomberg Intelligence team is George Ferguson. He's Senior Aerospace, Defense, and Airlines Analyst, and he joins us from Zoom in New Jersey. George, thank you so much for being here with us this afternoon. Let's start on the American Airlines news. What did you think was surprising to you on this news? I thought that everyone was flying, so I'm a little bit confused.
Yeah, so I think that the expenses kind of came in line with where we expected it. We haven't been the most bullish on fares, but there's a lot more people in the marketplace that have been, and so I think the top line was probably weaker than most people wanted, and so I think that's why you see some of the response here. I don't think it was terrible, but I think there may have been a lot of people in the marketplace that think fares were even better than the airlines were letting on, and potentially a source for over performance here in the first quarter.
George, what's going on with fares? Because I've been looking into some different things, and I feel like, shoot, it's all so expensive. But are fares starting to tick down?
So we get a data set from Airline Reporting Corporation. We get it once a month. The last time we looked at it in February, it actually looked quite strong. It had a nice rebound after what I would call a middling January. But the bookings rates that we were seeing on this data set were about 80% of 2019, where we have a lot of the airlines flying really close to 100% of 2019 schedules. So we felt like the booking rates were lagging. Mm-hmm. So maybe the airlines have been trying to keep fares higher, hoping that booking rate would come along. American didn't give us all the detail, right? They didn't give us all the fare detail, but I'm wondering again, I think the airlines are trying to hold fares up. They have higher costs coming down the pike, right? The pilot unions are in for pay increases. Delta has agreed to it already, an 18% pay increase for pilots, quite sizable, with another 5% coming for the pilots at the end of the year. We think that'll happen at the rest of the full service carriers, and that all the airlines have to step up to those higher costs. So they need to keep fares high because they've got higher costs coming as well because of this wage inflation. So again, we'll see when we get more detail on fares, but I suspect that's part of the problem is there's not enough demand to fill airplanes at that higher fare.
So in your research note, you note a lot of issues that American Airlines could be facing, like you just said, labor, airline fares, capacity, potentially oil coming down the pipeline. But what would you say is the single biggest factor that's impacting profits for American Airlines? Is it those increased labor costs?
Yeah, well, I think it's really that fares aren't keeping up with the increased labor costs, but the increased labor costs, they're kind of already here. And I think it's a big challenge for all the airlines, because to give the pilots that kind of wage increase, you're going to need to keep decent fares in order to pay for it. I will say, oil prices have been coming off. They're lower than we started the year out,
right?
And they've relaxed, and that's a little bit of a tailwind for the airlines. If it stays down, continues to decline as we expect potentially, the Fed I think talked about a potential recession this year, that could relax oil prices, and that could be a positive for these income statements. But again, it's going to be really difficult to keep fares high, especially in an economy that's slowing as well, right? Consumers are already squeezed, especially low-end consumers. They won't want to spend as much on air travel. That will be the big challenge is fares, I think.
George, how do you think about this cycle right now? And I think about, pre-pandemic, airlines had gotten so smart, I feel like, in squeezing out excess capacity. They've gotten so good at charging me for every breath I take when I get in an airplane. So help me out here. Like, what is the cycle we're in? I think it's interesting what you said about higher costs in terms of unions and salaries, but how are you looking at this more broadly at the space in terms of this airline cycle?
Yeah, so we recently published a note on the airline's balance sheet to spend a little bit of time on it. They have a lot of cash, U.S. airlines do. So I think they're ready to weather a down cycle. They haven't sort of gotten rid of all that cash they took on during the pandemic. They do have more debt than they have had, so that's an additional challenge, but it's pushed out. So we kind of see them again able to weather the cycle here. Now we'll see if a recession really hits. I think usually you'd think that the full service carriers would have the most difficulty in a recession, because I think the consumer would drive to a lower price point. I will say we have not seen business travel come back to the 2019 levels. No, still not. As of February, we were kind of 65%-ish is what we saw. So that could be a tailwind for the full service carriers as well. But it hurts not to have those full service travelers back, because they're, they pay the big fares. And, I'm hearing a lot of companies now talking about return to work more than 3 days a week, right? 4 days a week, maybe 5 at some companies. I think that will help business travel out as well, because I think that's part of the drag there. But again, I think they're generally ready for a down cycle, especially if it's not too dramatic of a down cycle. But it's going to be a challenge to fill airplanes when you've got a consumer that's a little bit squeezed, and that's gonna cause earnings pain. Hopefully not for the summer. Because the money making portion of the year is 2Q, 3Q. We're into the heart of that. We'd like to see the consumer not run out of gas during those quarters. Airlines could book decent profits in there if they don't run out of gas. Winter months are, they're always kind of challenging.
Yeah, it's funny that you say about coming back to work. One of the most read stories in the Bloomberg is about J.P. Morgan Chase telling its managing directors they now must be in the office every weekday, so ending a hybrid work practice that arose during the. They're like, get back. Having said that, not all airlines are the same. So I'm looking at the S&P Super Composite Airlines Index, which is down about 4.5% or so. American obviously is the biggest laggard, down almost 10%. UAL's down more than 7%. But I look at Southwest, it's down about 2%. Delta's down about 3%. Who is best positioned to weather what's to come?
Yeah, I think what you're seeing today is, again, some of those low-cost carriers, not some of them, right? All of them are performing better than the two worst performers, like you said, United and American on the day. Those low-cost carriers, a squeezed consumer budget means the consumer probably looks to get more out of their air travel for less money. I think that that helps the Southwest, the JetBlues, the Spirits, the Frontiers, if that's the way you're willing to fly. And I think generally Delta does a better job in revenue than United and American. We looked at Delta the other day, just posted a new earnings outlook for 1Q. We thought they were a little bit, the cost of fuel was a little bit high in some of their guidance. We lowered that. It's a bit of a tailwind for them. So maybe their 1Q looks a little bit better based on where they started their guidance. But I think the low cost carriers, though, are probably the ones that are.
So heading into earnings season, we get Delta tomorrow. What are you going to be listening into on that earnings call? We have about 45 seconds here.
Yeah, we're gonna be all over domestic fares, right? That's the most important thing for every U.S. airline. We'll be all over the split between that premium and non-premium passenger and how that's holding up. And then probably the most important international markets we'll be looking at, the European transatlantic is just the big market. Pacific is still, really low right now because China isn't fully open, and Latin America kind of applies more to American, but it applies to all of them. But we'll watch European a lot.
Well, thank you so much. We've got a really great setup now as those earnings start to kick in. As Maddie said, Delta tomorrow. George, thank you. George Ferguson, Senior Aerospace, Defense, and Airlines Analyst at Bloomberg Intelligence, joining us on Zoom in New Jersey. SkyWest, by the way, with the smallest decline in the S&P Super Composite Airlines Industry Index. It's down just about 1.3%. So, as you said, some of those lower cost.
If you're willing to fly, I'm sorry, it was just
pack
so
your
funny
bags.
the way he phrased it. If you're willing to do it,
don't eat. No pillow, be squeezed.
Tiny chair for tiny people.
It takes so many, right, to make it all happen. Our thanks to George. All right, now let's get to world and national news. Off to D.C. we go. Nancy Lyons in our 99.1 newsroom with an update. Hey, Nance.
Thanks, Carol. The second of two expelled Tennessee lawmakers will be returning to the State House. Justin Pearson this afternoon was reinstated by the Shelby County Board of Commissioners by a unanimous vote. The reaction from the crowd after hearing that tally. Republican lawmakers had ousted Pearson and fellow African-American Representative Justin Jones last week for violating rules of decorum. They both used a bullhorn on the House floor to plead for tougher gun laws following the shooting at a Christian school in Nashville. Jones was also reinstated by unanimous vote on Monday. Inflation in the U.S. is slowing down. The latest Consumer Price Index report from the Labor Department shows inflation slowed to 5% in March amid drops in both gasoline and grocery prices. Heather Boucher, a member of the Council of Economic Advisors, says it is a good sign.
It feels like we are getting back to the kind of economy we need to see with that strong and steady but yet stable pace of growth.
Heather Boucher tells Bloomberg, we've seen 9 months now of slower growth. The Biden administration is proposing strict new automobile pollution limits that would require up to 2/3 of new vehicles sold in the U.S. to be electric by 2032. That's a nearly tenfold increase over current electric vehicle sales. EPA Administrator Michael Regan says it will help protect human health.
Reductions in greenhouse gas emissions mean cleaner air and less pollution. It means less sickness, and it means healthier Americans.
Regan says America is a leader in taking action on the climate. Republican critics, though, are calling this an overreach by the EPA, claiming there are not enough charging stations and saying it would severely strain the power grid. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ in the red. A slight emphasis on slight bounce off the bottom on the S&P. But let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are down in a very choppy tape. The Dow is currently down 48 points. S&P's dropped 16, and NASDAQ is lower by 88. The U.S. 10-year yield at 3.41%. Gold is up 13. Energy is climbing. And Bitcoin is lower by 1%. Of the main 11 S&P sectors, leaders were energy and the industrials. Consumer discretionary was under pressure. And leaders to the upside in the Dow, Dow Inc. and Merck, while Disney and Walgreens led to the downside. In deal news, Emerson Electric to buy National Instruments for $60 a share. And in other news, Fed's Daily says her base case is not for a recession. Wrapping things up, JP Morgan calls managing directors into the office 5 days a week. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over your Bloomberg. Type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, just about 18 minutes left in the trading session. We've got stocks definitely off their best levels of the session, as Charlie just mentioned, down across the board. Tech stocks, once again, taking the biggest hit on a percentage basis, just down about 0.7%. So let's get to our Drive to the Close guest. Brenda O'Connor-Wanas is with us. She's Senior Vice President and Financial Advisor at UBS Global Wealth Management, based in Florida, but here in our Bloomberg Interactive Brokers studio here at Bloomberg headquarters. So nice to have you here. How are you?
Thank you. It's I think I brought the good Miami weather to New York.
You really did.
So you guys can thank me for that.
Thank you. We really appreciate it. Having said that, maybe clear outside in terms of the weather, it feels like, at least for today, but the cross currents on the markets are pretty tricky, and I think that's why we have such a tight range, or we have for the last couple of days, some low volume when it comes to the equity trade, and even treasuries feel like they're tight, trying to figure out what's next. What do you think is next?
Right, and obviously today it's all about the CPI numbers. There was a fixation a few days ago on the payrolls on Friday. All seems to be trending in the right direction. When you look through the headline and focus on the core, though, the messaging is not as clear. And so I think that gives ammunition to the Fed to raise another 25 in May. The problem is May is a long time away, right? So there's a lot of additional data that can come out here that can shift the narrative. And we're going into earnings season, so that is an interesting place where that narrative could be shifted again.
Yeah, well, and one of those potential, another issue in this hurricane of data is the credit crunch. So I wonder what you're looking at and what clients are asking you about when it comes to the credit crunch and the impact that could have on the Fed.
Right, so I think two things here. And in terms of risks, we are looking at domestic risk for the first time in a long time. We're not focusing on Ukraine. We're not focusing on China. We're focusing on the knock-on effects.
It's amazing, right?
I
In
know.
a year, go ahead. Yeah.
We're focusing on the knock-on effects from the banking crisis as well as the debt ceiling. So I would say in terms of the credit crisis, we have relative stability now, but the fact is the price and availability of credit has changed. So we're going to see some of that permeate some of the bank earnings, maybe not this session, but maybe in Q2. The bigger stress is what does this do to other parts of the market, and commercial real estate becomes really exposed.
There was a comment of, I think it was Jeffrey Rosenberg on BlackRock earlier today on surveillance, and that was his whole point. We know what's going on in terms of credit. We know it's tightening up. We know the direction. We just don't know the magnitude. And I do feel like what we get, let's go back to earnings, which you talked about at the top. Bank earnings, how key is that in kind of getting a tone of maybe how much things are kind of being reined in when it comes to credit.
And I think that more than usual, investors are going to be paying very close attention to the bank earnings because the messaging of how this will impact the broader economy is going to be, we're going to start to see that. And I really think about it in two ways. So first of all, if we see evidence of tightening lending standards, number one, how does that change the calculus for the Fed? Because we know that credit contraction is deflationary. So how are they going to incorporate that into their thinking? How is that going to impact the path of rate cuts? The other bigger thing, and you highlighted this a little bit, is what is the economic contagion in the broader economy, specifically to those small and mid-sized businesses? We know that they are so dependent on access to credit.
And we've had some stories already about it being reined in.
So how pervasive is this problem? And we won't see that on Friday with the big bank earnings, but as we go through the cycle here, we're going to see that in some of the regional banks.
Are you concerned about contagion into the tech sector specifically when it comes to that credit crunch?
Well, the tech sector is interesting, and I bring this back to what we've seen in the market so far. You know, the narrative in Q1 was not what people were expecting. Everyone, or for the most part, a lot of market participants were expecting a softer Q1 and Q2 with market strength in the back half, and that wasn't the case. You saw this broad-based rally at first glance, but when you look under the hood, it really was driven by 7 names. These were all big tech, and that really was driving a lot of the gains. And so, you know, we've seen tech rally, but I don't think that we should assume that that rally is going to stay permanent.
Brenda, having said that, how many times do people it's not in the growth stocks, you got to get out of them, and then investors pile back in, and that is where you see the growth, though, when it comes to top and bottom line. So I do wonder how you think about that. When I think about my world, what it's made of, it's a lot of Apple stuff. I use Google all the time. Like I think about that a lot. How do you think about the tech space in terms of where the real, next wave of growth opportunities are? Is it those big established names, or is it going to be names we just don't know about yet?
Well, I mean, big tech is not necessarily the real growth, and a lot of those names are now consumer staples.
That's true.
So, where there's going to be really interesting opportunity is in the earlier stage stuff. It's at times when markets dislocate that some of these really innovative and creative technologies emerge. So they're going to be earlier stage. I just think that from a broad equity positioning, it hurt us a little bit that we were underweight growth in tech, but I still think we're only 1 quarter in. There's still a lot of this year we need to see.
So where do you want to be right now in terms of strategy?
Right. So I think fixed income is the big call. I know you've had a lot of conversations about bonds, and I would say
rare in fixed income.
I know. Where in fixed income. And so I think that really we're staying away from high yields. We're staying away from senior loans. We're doing 2 things. We're doing high quality investment grade, and we're extending duration. And if you think about it this way, fixed income was not a good investment last year, right? You saw the U.S. Ag down 13%. There was 0 diversification benefit there, but that's been reestablished. So investors will benefit from that. Also, in terms of what the Fed is going to do, no one knows a clear timing, but for the CPI data showed us today that we're closer to that 9th inning, and so there's an opportunity, again, high quality, to lock in attractive yields and also benefit from capital appreciation as the Fed potentially comes down later in the year.
So high quality corporate.
High quality corporates, yeah.
Okay. No sovereign or no treasury?
Well, no. So treasuries, we do have an allocation. You're doing kind of a barbell approach.
Okay.
On treasuries, I think the interesting thing that we're watching in this space has to do actually with the debt ceiling. So in terms of the debt ceiling, unfortunately, we think this is going to go down to the wire simply because the Democrats are not going to be willing to do any of those spending cuts.
That's how it plays.
Exactly. A deal will likely get done, but we're looking at the treasury market for indication of any pervasive weakness. I think next week could be interesting as those tax receipts start to come in. We don't really have a clear understanding of the drop dead date, but we could in the coming weeks.
Really smart. So real quickly, SVB didn't change your calculation on fixed income.
No, I think broadly what it did is 2 things. So for investors, it really just reinforced the view that you need to have multiple providers, and there was also a movement towards bigger bank, more established bank names. So it did not really affect our calculus. There are so many other drivers now that are going to impact both fixed income and equity movement.
People, though, investors, and I got about 15 seconds, comfortable committing new money right now?
Yeah, so I think there is, you have to do a few things. So you have to still invest in short-term treasuries to keep your powder dry. You can selectively go into parts of the equity market, non-U.S.
But you guys are still seeing money
Absolutely.
come in, new money come in. Interesting. Come back soon and safe travels.
Yes, please, Carol.
Loved it, loved it. Brenda O'Connor Juanes, Senior VP, Financial Advisor at UBS Global Wealth Management, as we said, based in Florida, but here in our Bloomberg Interactive Broker Studio. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. 7 minutes to go ahead of the closing bell. Warner Brothers Discovery is renaming its streaming service Max, dropping HBO from the brand and bolstering its unscripted programming in a bid to attract more subscribers. Warner Brothers shares Warner Brothers Discovery down now by 6.3%. Emerson Electric has agreed to acquire measurement systems maker National Instruments in a deal valued at $8.2 billion following a long pursuit. With more on that story, here's Bloomberg's Denise Pellegrini.
Charlie, St. Louis-based Emerson will buy National Instruments for $60 per share in cash, confirming an earlier Bloomberg News report. And this price represents a 49% premium to National Instruments' closing price January 12th, the day before the company announced that strategic review that led to all this. And sources tell Bloomberg Emerson beat out smaller rival Fortive Corp in a competitive process for National Instruments. The back and forth over Austin, Texas-based National Instruments, which provides hardware and software for engineers and scientists, has gone on for almost a year. Charlie.
And that's Denise Pellegrini. We've got Emerson down by just about 1%. The target, National Instrument, up 9.84%. Peloton interactive web traffic had decelerated in the fiscal third quarter without the help of promotions that the fitness company ran during the holiday quarter. This according to Morgan Stanley, citing similar web shares of Peloton today. They are down by just about 11.5%. Those are the company stories we're following, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
Yes, indeed, everybody. Carol Masser here in our Bloomberg Interactive Broker Studio. Tim, on leave, so with us is Madison Mills of Bloomberg Quick Take. Calling all J.P. Morgan managing directors. We talked about this a little bit earlier with George Ferguson about people being, that work from home maybe increasingly coming to an end, at least at some places.
Yeah, and it really is at a lot of these big banks. And the latest shoe to drop here is J.P. Morgan. Managing directors got to be in every weekday. They said our leaders play a critical role in reinforcing our culture and running our business. They have to be visible on the floor and meeting with clients. So I guess my question is, where does this fall across the board at the company? Are some other folks going to be able to continue working from home?
Managing directors are kind of senior, right?
I mean, that seems pretty senior.
So
right?
to me, it's kind of setting a tone, because you get to a point where you're like, if you're, forgive me for lack of a better word, an underling, and you're like, well, my boss isn't here.
Yeah.
Why do I have to be here? So it really sets a tone if the higher ups are at a company, right? That you're going to be like, okay, everybody, back to work. Physically back to the office.
Yeah, no, it's so true. And even, they said that employees are responsible for meeting the hybrid model requirements, and your manager has to ensure it. So,
can I also say wanted, or maybe it's already been filled, Rat Czar for New York City.
Oh my God,
I love this story.
Carol,
I don't have a good segue.
Carol.
The New York City Rat Czar will earn $155,000 to lead the rodent fight. It's been long awaited. The Rat Czar, Kathleen Karate, previously spearheaded the Department of Education's rat reduction efforts. She's going to become the director of rodent mitigation. This is according to New York City Mayor Eric Adams, making some statements today.
I love it. And it ends with, is it Eric Adams in the story saying it ends with, we all hate rats?
Oh my God, do you know one of my favorite?
So good.
This is going to sound so sick. Please don't judge me, world. But it's like you get on the New York City platform, and I just sit there and I'm like, I just look for the rats, right, that are on the train tracks.
I mean, they're the pets that I don't have. You know what I mean? Like, it's just, this is what we have to live for in this city. If you can't make a joke out of it, then it's going to gross you out way too much.
This is something for YouTube, or you want to Google, because apparently the press conference that was held was littered with references to the Pixar film Ratatouille and the meme-ified pizza rat, which, if you don't recall, was the rat who got the piece of pizza and was up the stairs. I think at the World Trade, I don't know if it was the World Trade that they were setting this press conference up. Anyway, all right, time to get back to the markets. Our cross-platform coverage Beyond the Bell starts now.
Short and full market coverage right here on Bloomberg, coming up in a second as we take you to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Katie Greifeld. We're counting you down to the closing bell, and here to help take us beyond the bell, it's a global simulcast, joined right now by our very good friend, Madison Mills. Jess Menton filling in today for Carol Masser. Welcome to our audiences.
Thank you. Again,
across
another compliment.
Bloomberg Television.
The compliments just pour out of you, Romaine.
Absolutely.
Call me Jess or Maddie. It makes me sing. And
I love you, Carol Masser.
I know you do.
And I love our audiences across all of our platforms. Unfortunately, I'm not sure there's a lot to love here in the equity markets here.
No.
Basically red across the screen right now for all the major indices.
Yeah, absolutely. And we're going to get into the industry groups in a little bit. You guys have been talking about it. We've been talking about it. We just talked with George Ferguson of Bloomberg Intelligence. The airlines, because of that American Air news pre-announcing, continue to be down almost 4%, Maddie, in today's trade.
Yeah, but then you also look at the consumer more broadly, right? Bank of America this morning in one of their notes saying that they're really concerned that consumer spending lags could create real risks heading into Q2. As we go into earnings, Katie, I'm going to be really looking at those consumer discretionary stocks.
Well, we get a hint of the earnings season on Friday. Of course, the big banks kick us off. It's going to be interesting to hear the C-suite commentary about what the state of this economy looks like. Obviously, those big bank CEOs have a unique perspective on the consumer.
Yeah, and just going back really to that airline, because I think the American Airlines thing really spooked a lot of people. Because they, on one hand, they're basically saying, hey, we expect demand to hold up. But then on the other hand, they're basically saying that, well, passenger purchasing behavior is shifting. So I'm not quite sure what that means, but I think it means that maybe they're going to not be buying as expensive of tickets as they were.
That's exactly what George Ferguson said of Bloomberg Intelligence. Not enough demand to fill up those higher fares. That's what's going on.
A pretty volatile day here in the broader markets as we get the closing bell here in New York. Over on the Dow Jones Industrial Average, we're down roughly about 39 points as we wait for the numbers to settle. That's down about 0.1% on the day. The S&P 500, which had been in the green, is going to close in the red, down by 17 points or 0.4%. The Nasdaq Composite down by about 0.9%, and the Russell 2000 closing out the day, Carol, down by 0.7%.
Am I missing something? VIX unchanged here, it looks like today. As we talk about these tight ranges when it comes to equity trading and the Treasury trade, the VIX also unchanged at 19, essentially, and change. Having said that, the S&P 500, more names to the downside, Katie, about 323 to be exact.
And you can see that on the industry group level as well. Definitely more red than green. If you look at what was green, it was pretty defensive. You have capital goods up there as well as household products. Then you go down the list all the way to the bottom. It was autos leading the charge to the downside, nearly down 3%. A lot of that coming from Tesla. But Carol, the chips too, also underperforming today, down nearly 2% or so. It's been a difficult couple of days for the chip sector.
Yeah, absolutely. All right, so let's get to some of the individual gainers in today's session. A little tough going, at least looking at some names. The cloud sector, I talked about it earlier. We definitely did see that group rallying. Datadog up about 3%, top of the NASDAQ 100. Remember, we saw the selling off yesterday on that UBS call, some concerns about Microsoft's Azure computing business and cloud business. So we did see some selling yesterday, but we saw investors moving back into the space today. Also want to mention Pioneer Natural Resources, PXD is the ticker. It's up about 2.1% here. In the news a lot, as you know. Stock has gained around 8-9% since that Wall Street Journal report that Exxon has held some preliminary talks about an acquisition. But I thought it was interesting. Earlier, this was top in the S&P 500, so a little standout there.
And just to add to that, too, I saw you have Fortive on there, but I think it's interesting. We did see a lot of activity, at least a lot of reporting about potential deal activity today.
Yeah, no, it's interesting, right? Amid all the uncertainty that is still going on, that companies are at least talking about it and potentially maybe looking to pull a lever. Fortive, you mentioned, top in the S&P 500, heavy volume, up about 2.7% by the close. A headline last night, Emerson said to beat Fortive in the competitive process, they were bidding for National Instruments. Another media outlet talking about for Fortive, if they had done the deal, maybe the debt exposure to it. So anyway, investors liking that maybe they didn't get it.
And we should point out, Triton was up more than 30% on the back of that Brookfield deal that we were reporting on earlier.
Yeah, deal flow, you're right.
Yeah, and we've got some big headlines on some of these decliners coming through. American Airlines closing 9% lower on the day after warning quarterly profits likely to fall short of Q1 estimates. That's amid those persistently high costs. And as Carol was mentioning earlier, we talked to BI's George Ferguson, who looks at airlines really closely, and he said the lack of consumers' demand for those higher fares is what's really killing some of these airlines. And part of that is because of the lack of return to business travel, and that's where you see a lot of demand for those first-class tickets and upgrades. Then we go down to...
And don't forget, we get Delta Airlines tomorrow morning.
Yes. And I asked him what he's going to be looking for on those earnings calls, and he said those airfares and demand for those expensive airfares really critical. Cirrus Logic here down 12%, biggest drop since 2021 on that news that Apple may be changing its design. That could impact Cirrus and really everyone within Apple's supply chain. And I've got to end with Abercrombie & Fitch. We were all impacted by this company in high school, struggling to maintain its margins amid inflation and currency headwinds. Again, really looking at that consumer spending. Is the consumer buckling to the red-hot inflation that we've been seeing, even though this morning maybe we get some news that that inflation is dipping a little bit?
Yeah, and we saw a lot of apparel makers are really moving lower here on the day, including Gap, Abercrombie, American Eagle, even the big box stores like Target moving lower as well. There was a lot of activity today in the Treasury space, a lot of sort of oscillations, if you will. There was a big drop down in yields after we got that CPI report, but that sort of corrected itself. We did still move lower by about 5 basis points on the 2-year yield back back below 4%, down 3 basis points on the 10-year yield. The action on the longer end of the curve, particularly with the 20-year and 30-year, Katie, was a little bit more muted.
And I think it's so interesting to look at the intraday action. To your point, you did see yields initially drop and then come back after the CPI print, but it was the Fed minutes from last month's meeting that was the bigger impetus today. I would not have expected that.
Yeah, I think getting some clarity maybe about what internally is going on at the Fed, specifically among the Fed members as well as the Fed staff in terms of what they are seeing later in the year. And I feel like we just kind of do a drinking game of how many times we kind of hear recession at this point. Works for me, you guys. But I'm just feeling like the momentum is picking up at this point.
No, it's so true. The calls for recession really picking up here. And I think you bring up the great point, Katie, that the equities market and the Fed may just continue to disagree with one another. We saw that in the CPI print this morning and then again in this afternoon.
Just want to get you some breaking news here. Let's start off here with Rent the Runway, a smaller stock to be sure here. They are reporting earnings. The forecast, though, not looking good. And the shares taking a leg down here. Their first quarter forecast looking at revenue of about 72 to 74 million. That's pretty much on the nose here, but for the full year, coming in very light. 320 to 330 million is the forecast they're giving for revenue. The street on average was looking for about $345 million in revenue. The shares taking a leg down by more than 10% here in after-hours trading.
Yeah, seeing a bunch of selling. I do also want to mention some headlines coming from Harley-Davidson, talking about a CFO transition, announcing that Gina Getter, I hope I'm saying it correctly, will step down as CFO at the end of April 2023 to accept an opportunity outside the company, and they're going to start that formal search process for the next CFO. David Vinny will be the interim CFO at this point. I'm just looking to see if the stock's moving here in the after hours.
It's only down about a percent here on the day, but it was interesting. We've been talking a lot on the show about just all the CFO transitions that we've seen over the last few months. A lot of CFOs just kind of throwing in the towel and saying there are better opportunities out there. It's a challenging time if you're a CFO of a big company.
We've just had somebody on in the search management space, and they said that they've got a lot of requests for kind of temporary CFOs that a lot of companies need it. So it's definitely underplay. I agree with you. A lot of pressures.
And just real quick too on Gina, we don't know where she's going, but we should point. There's been a lot of speculation about her and her. I guess the potential for her to take on a bigger leadership role, i.e. CEO. She's got a lot of experience. It'll be interesting to see where she lands.
That would be interesting because, I mean, in our conversations, Romaine, when you think about sort of where a CFO can go, it's mostly to another CFO job. You don't often see the move from CFO into CEO. So it'll be an interesting story to watch.
Well, the role. Go ahead, Romaine. Go
Well,
ahead.
I was just going to say, she's had like 3 or 4 CFO. I mean, she was at General Mills, she was at Tyson, then at Harley. So I mean, she's been around the block on the CFO side. Like I said, there's been a lot of speculation about a lot of people looking to her for a bigger leadership role.
No, it's true, and it also just feels like the definition of the CFO role has really changed, right? It's not the same as it was when we had a zero interest rate environment. Now it's a completely different ballgame out there.
Well, and I would say it goes all the way back to the financial crisis. Like those CFOs kept those companies alive, if you will. We saw it during the pandemic, and I think at some point they're so involved, Katie, in strategy and figuring out where money should be spent and making sure that costs are kept in line, that I think it's an exhausting job at this point, and that's why you do see a lot of movement, and you actually do see a fair amount of CFOs increasingly moving into that CEO step.
Yeah, and you don't get the glory in the way that the CEO does either. You get all the work.
You still get a C at the front of the title.
Did you guys see that we finally have a rat czar in New York City, and they're going to be paid
It's me, actually. I'm the rat
I know,
czar.
Katie, I was like, where is your name and the redhead on the
But I'm curious. I saw this. First of all, she has an interesting backstory. But they're only paying her 155. I feel like the rat czar should be like the highest paid position in this city because we got a lot of rats.
I would pay for the opportunity to be the rat czar.
You would pay for the opportunity?
If you got paid per, rat capture. Can you even say that? Is that bad?
No.
Is PETA going to call me or something? All right, we got to wrap. We got to wrap. Nice. We will see you.
No one's stopping you.
True. We can all do it.
Yeah, they'll just shut down off the mics in like 2 seconds. All right, guys, we got some earnings coming our way tomorrow, and of course PPI. So that's a wrap on our cross-platform coverage. We call it Beyond the Bell, Radio, TV, YouTube, and Bloomberg Originals. We'll see you. Let's just set it up, guys, because we're just about 40 hours away from the big bank earnings. JP Morgan, Citi, Wells Fargo, all reporting Friday morning. Two great stories on the Bloomberg, among our most read, that kind of tee us up for the reporting season. So let's bring in Sri Natarajan, who is a fan, apparently, of me and Maddie. So heart out to you, Sri Natarajan. Kat Doherty, also with us. Both are finance reporters here at Bloomberg News. Both join us in our Bloomberg Interactive Broker Studio. And they really have two key stories that will set you up. All right, 'tis earnings seasons, guys. Let's talk about the key metrics. Sri, I want to start with you. Biggest U.S. banks, their reserves, you write about it. It's kind of much more interesting than usual because of the bank collapses. Wait, first of all, how much do you love us and how much did you hear us?
Yeah.
Are we on
Any
the air
notes,
or off
any
air?
notes about your favorite things that we do on
As you
air?
were listening to us on radio when you were in D.C.
I will have to fish out my notes, guys. Sorry.
Okay, it
All right,
shouldn't be that hard.
You can get back to us on that. All right, so talk to us about
the reserves.
The reserves. Sorry, I got a little like...
It's interesting, and this is, of course, you're referring to a story that came out last night, which talks about the biggest U.S. banks that played somewhat of a key role in shoring up the ailing lender, First Republic, just last month, and the reserves that they're having to set aside as part of the process. Some might look at it and say it's almost quasi-mechanical, but at the same time, interesting, right? Here you have Janet Yellen in consultation with Jamie Dimon corralling all the biggest CEOs of the large banks and saying, we need to make sure that this problem doesn't get worse. The big banks chipping in $5 billion each, effectively taking their cash, parking it at another bank,
right?
Not in the greatest shape, but saying, hey, please keep this money, meant as a confidence restoring measure. But what that did is sort of triggered this accounting rule that requires you to make sure that you cover for any potential losses, any possible losses. And that means that all the biggest contributors, JP Morgan, Wells Fargo, Citigroup, Bank of America, are all setting aside at least $100 million more in reserves. And that's not nothing.
Right.
And it's also...
That's money that they can't lend out or do something with, right?
In some ways,
extent?
when you look at sort of the balance sheet hijinks and when you look at the earnings, it will ultimately affect the bottom line. And let's be clear, 100 million for these banks, which mint out billions in profits, it certainly is not something that will be a massive concern or even a real concern. But at the same time, it is an acknowledgement that this cash that was parked with another bank isn't entirely risk-free and brings a conversation back to First Republic, because at that time it was really supposed to be a measure that would give the bank some time to figure out strategic options. A few weeks in, we really haven't gotten any meaningful update. We know First Republic is going to announce its earnings results in 2 weeks. Will we have something meaningful by then that would allow these banks to get their cash back, find out a way for First Republic to either announce some sale or in some way be put out of its misery?
All right, so Kat, you got to come in here. We love you too, so don't. So just Sri.
Thank you.
So tell us about bank deposits, because I also feel like this is a big metric and an important one.
It is. It's going to be the big headline, and it hasn't been in previous quarters. We haven't cared as much.
Isn't that funny?
I know. It's
Different era.
The themes do change, but we're not only focusing on deposits, but the size of the banks is expanding in terms of at least our coverage. So the regional banks, we're going to have earnings extend really through the end of this month. And deposits are going to matter really for the smaller players because it impacts their business and what they're able to do or not do. The banks that have fallen into receivership, their outflows that they saw was the reason that they had to sell some of their assets at a discount, and then eventually some of them couldn't make it through and had to turn over to the government. So the big question is going to be, how does the market react to the disclosures that the banks are going to make in the coming weeks? They're going to be giving a lot more detail, both the big banks talking about maybe some of the inflows that they saw from the smaller banks.
Right.
And then if you're a smaller bank, you're going to have to define exactly how much deposits you saw leave potentially your door, or if things have stabilized in recent weeks. All of these details are going to really make a difference in terms of how executives communicate to the market of what is going on, and really from the analysts that I've spoken with this week, it's about the outlook. It's about what future expectations are rather than what has happened in the past in the last 3 months. Not that that doesn't matter at all, but it's really going to be future expectations that we're focused on.
We really want these bank executives to be like, everything's fine, guys. There's nothing more bad that's going to basically drop.
And they will say that. I'm sure. Yes.
Okay.
I mean, they do every quarter, and they're going to talk about the strength of the consumer, and they're going to talk about the strength of their balance sheet. But it's really the questions from analysts that are going to be pressing for further details.
Yeah.
And it's really the answers or the non-answers that are going to matter.
Shri, do you expect analysts to be asking a lot of questions on earnings calls about the banks shoring up their reserves?
See, it's the most interesting part for me is when I think about my 10 years at Bloomberg, right? When we're talking about the bank earnings season, we all trudge into the office with donuts and coffee in hand at 6 a.m, bright and early for the 6:30 a.m.
I never get donuts. What's up with that?
Yeah.
But go ahead.
You need to visit us more often, Carol.
I do.
But always you're trying to figure out, trying to read the tea leaves. What do they have to say about the economy ahead? What do they have to say about the outlook ahead? In some ways, when we look at JP Morgan, Citigroup, BofA, Goldman, Morgan Stanley, they are not the headline names this quarter.
Right.
I can't remember a single occasion, at least in the last decade, where we've come in and said, I can't wait for the Western Alliance earnings, or PacWest to report its earnings, or East West Bank. But this quarter, the story truly is regional banks. We need to see the numbers, and we need to be assured that the panic certainly has quelled. That's clear from the outside world. But is that a matter of the world having moved on, or have the underlying issues been solved? Deposit flight has been curtailed, but are these banks in a good enough position to go back to business as usual and give us reason to see their stocks rebound? So yes, to your question, Maddie, they will be asked questions on reserves and whatnot, but I actually think the more interesting aspect, or what analysts will be trying to glean, is what they have to say about the broader banking system. That will play a big role this quarter.
Agreed. We've been talking a lot about credit crunch. I keep quoting Jeffrey Rosenberg of BlackRock, who's on, I think, Surveillance this morning, who said we kind of know the direction in terms of credit, we know the direction, but we just don't know the magnitude in terms of it slowing down. And I feel like that's what we're all looking for, Kat.
Absolutely. Lending is still going to be a really big topic. We expect lending to slow down or pull back as it has in recent quarters.
And it started, right?
And it's already started. But it's really, again, the outlook for, will that slow down even more, a greater magnitude? And also, our consumers, have their savings, which had been bolstered during the pandemic and had started to drain, what does that drain look like today? And that is going to also affect deposit levels too.
No, that's a really good point. It all plays together. 30 seconds. Shri, the CEO or bank that you're most going to be focused on? I know you do a lot with Goldman.
No, David Solomon, the most interesting CEO around. Of course, I'm going to be focused on it. But let's be honest. This quarter, you want to go to the Oracle of Wall Street, or at least the one who's always the most outspoken. Everyone will be interested in seeing.
Does he sound like Jamie Dimon?
That sounds just about right, Carol. Everyone's going to be interested in hearing what he has to say. Also, because in some ways he has made himself the face of this whole banking wobble, and trying to make sure the system.
And on the other side of things, the regional bank CEOs, First Republic CEO, any of the answers they get.
Kat and Shri, we just perfect.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We check markets all day long here at Bloomberg. Right now, we're keeping an eye on shares of Harley-Davidson, ticker HOG, H-O-G, and stock is down 7.5% after hours. Harley-Davidson has named David Viney as interim CFO. That appointment effective April 28th. Gina Getter will be stepping down as CFO at the end of this month to accept an opportunity outside of the company. That's what we know. That's headline right now on the Bloomberg. Again, shares of Harley-Davidson down after hours by about 7.8%. Down day for the Dow, the S&P and NASDAQ. We had the S&P falling 17 points today, down by about 0.4%. The Dow down 38, drop there of 0.1%. NASDAQ down 102, a decline of just about 0.85%. 10-year yield 3.39% with the 2-year, 3.96%. Spot gold 20.14 the ounce, up $11 the ounce today, up by about 0.5%. Bitcoin down 1%, back below 30,000 at 29,877. And West Texas Intermediate crude closing above $83 a barrel. WTI 83.24, up today by 2.1%. So again, recapping, stocks lower, S&P down 17, drop there of 0.4%. And that is a Bloomberg Business Flash.
All right, Charlie, thank you so much for that. Well, we mentioned Warren Buffett today weighing in on banks and dumb decisions by bank managers. Excuse me. He also called the electric car maker BYD company extraordinary and said chip manufacturer TSMC, Taiwan Semi, a fabulous enterprise. But, Maddie, he has been actually selling shares of them.
Which is so interesting because I love one of the things in our next guest note. She says that he loves B of A because he's friends with the CEO, and he likes the CEO. He likes Brian. So all power to Warren Buffett on that being the decision maker there. But really interesting. We're going to get some thoughts on the company with our next guest, Kathy Seifert, CFRA Research Industry Analyst. Kathy, thank you so much for joining us to talk about this. Let's just start broad here. What stood out for you most in Buffett's comments, other than, we like to joke about the dumb decisions quote, but what was most important to you?
Oh, sure. And, it's, I've followed Berkshire Hathaway, I hate to admit it, for almost 30 years now. And, from the perspective of an analyst like myself, it's kind of frustrating when you have to sort of chase down these media reports because Buffett doesn't conduct analyst interviews. So we're sort of forced to sort of hear what's on his mind, in interviews like this. So just to kind of frame some of the things that he said, I think his comments about the banking space were accurate. I think he was spot on that, the house view at our firm is that, we're sort of neutral on regional banks. There is a problem or a potential problem at some firms with some of their asset liability management, and there's an accounting process that some banks sort of play a little fast and loose with, which doesn't necessarily portend that every bank that's going to do this is going to fail. So I think it's important to sort of look at that within the context of a more muted framework. But I think his second point about bank failures is that the FDIC is there as a backstop. I think the risk is if you have an uninsured deposit. And that was sort of, one of the challenges at Silicon Valley Bank, which I don't necessarily, again, I'm not a bank analyst. I follow Berkshire, but I wouldn't necessarily say that they were a microcosm for the rest of the bank.
Well, Kathy, if I could just jump in for a second, and again, we should be fair. These comments were in an interview with CNBC in Tokyo earlier today. He's been actually talking to the media, and he's been over in Japan, and Japan is another thing that has certainly been on Buffett's radar. One of the things that we all kind of just, wait on everything that he says with bated breath is that it gives us an idea of maybe where he and his team are making investments or not. So does what we've been getting from him, whether it's on BYD, whether it's on TSM, whether it's on his interest in Japan, what does it tell you about kind of where he is allocating money and his interest is right now?
Well, it's interesting because there's sort of like the adage, look what they do, not what they say. And to your point, the first quarter holdings filings haven't been released yet. So the publicly available data is as of the end of the year. And based on that, he's lightened up his positions in a couple of bank stocks. He sold Bank of New York. He sold Ally Financial. He sold U.S. Bancorp. Kept his B of A holdings. In fact, B of A is one of his top holdings. He did sell his Taiwan Semiconductor holding. I think because the other, the purpose of the trip to Japan was to sort of have this meeting with all of these trading company heads. And I think that was an interesting transaction. And that's kind of classic Buffett. These are companies that are conglomerates. Despite the fact that they're called trading companies, they're really conglomerates like Berkshire Hathaway. The conglomerate structure is kind of an antiquated model here. It's more popular in Japan, but they also tend to sell at discounted valuations because it's a complicated structure. So in some respects, that transaction was sort of classic Buffett. The other thing I would note is that we're coming into a situation where equity market conditions and economic conditions look like they're poised to weaken. I mean, we had some decent inflation numbers, but then some of the Fed minutes, showed that the Fed is concerned we're going into a recession. This is sort of a prime environment for Buffett to start striking deals. And he's got over $100 billion in cash that he can deploy. He's not going to deploy all of it. So I
big or little, right? Like, he does buys a lot of smaller companies that aren't necessarily public. But where do you think he might be interested?
Connection lost. I think it's important to separate his equity purchases, which tend to be in industries that he doesn't necessarily want to operate. So I would look for his equity holdings to be in diversified industries, financial services, technology. I mean, that seems to be his equity holding strategy. On an operating basis, it tends to be more energy, consumer staples, consumer discretionary, and industrials. So, and insurance. His latest significant purchase, which I think made a lot of sense, was Allegheny, which was kind of a mini Berkshire. I think from looking at those areas and as equity valuations perhaps deteriorate, I think it's, we could see him start to make some deals.
I heard you say a continued interest in tech, and one of the things that he talked about was AI and ChatGPT. Do you see an acquisition in that space potentially happening, or is that too out of the ordinary for him?
I see if he makes any acquisitions, I would see it as an equity investment, not a consolidated operating investment. I think they've been pretty clear in delineating what they feel comfortable owning when they have operating control versus what they'll invest in as investors. And again, there has been a changing of the guard at Berkshire, and you've got two investment managers who are a generation younger than Warren with a little bit of a different perspective. So I wouldn't be surprised to see them go down that route, but as an equity investment.
I love the past words that Warren Buffett has used to describe Bitcoin specifically. I think on CNBC he called it a gambling token. I think he's also talked about it not having any intrinsic value and so on. But it is, Kathy, that gets to a good point, and he did talk about his heir apparent and sending him some nice compliments. We're talking about Greg Abel. I do wonder about the conversations that are around the table at Berkshire specifically, because, we've talked in the past about Berkshire getting into Apple at one point, that names that you would have never thought, but you're right, it's a younger guard and some different thinking there at Berkshire.
Yep, absolutely.
Which means what then? Where do you think it leads potentially? Maddie mentioned AI specifically, but where do you think it maybe leads then, Berkshire?
Well, it's interesting because I think it's going to be interesting, and I don't want to sort of speculate too much, but I think it's interesting to see what happens in a post-Buffett era. And I think that it's not out of the realm to see whether, I think number one, the role of chairman and CEO is likely to be split. There's actually a proposal right now that will be voted down. Berkshire controls, the biggest block of voting. But there's a proposal at the annual meeting in a couple of weeks to split those roles. So I see that role being split. I see the consolidation of power that currently exists being spread out more like that of a typical corporate structure. And again, this is a little bit out there, but I don't think it's out of the realm to see an activist come in and call for a breakup of Berkshire Hathaway to unlock some value. I mean, Berkshire stock trades at a decent multiple. It's a premium to the market, but if we kind of go along a conventional thinking, that's not out of the realm as well. But to your point about, what to expect, I think we're already seeing some evidence of a changing of the guard. And I think that's
fair. Yeah. Hey, listen, we've got to run. Forgive us. Just running out of time here. But really appreciate you weighing in on that flurry of headlines earlier today as a result of that Buffett interview with CNBC. Kathy Seifert, thank you so much. Industry analyst at CFRA Research, joining us on the phone in New York City. It's just fun to talk all things Buffett, just his views on things. And
well, he said earlier the only thing ChatGPT can't do is write a joke, and then someone used ChatGPT to write Warren Buffett Dairy Queen jokes on Twitter. So go check it out if you want to have a little laugh this afternoon.
That's a really good point,
He's
Warren.
so funny. Yeah.
All right, let's get to world and national news. Off to D.C. Back we go with Nancy Lyons. Hey, Nance.
Thanks, Carol. Tennessee Democrat Justin Pearson is headed back to the state house. The Shelby County Commission voted this afternoon to reappoint Pearson back to the House seat that he lost last week. Pearson and fellow Democratic Representative Justin Jones were expelled from the House by the GOP majority for leading a protest against gun violence on the floor of the Tennessee chamber. Jones was also reinstated earlier in the week. A massive fire at a plastics recycling facility is still burning and sending black smoke over the town of Richmond, Indiana, causing evacuations for hundreds nearby.
Michael Regan, the Federal Environmental Protection Administrator, said his agency has personnel on the ground there.
EPA was on site within hours of the fire, and overnight we began monitoring at 15 mobile monitoring locations. Today, the EPA team will collect debris samples in surrounding communities to determine whether asbestos-containing materials may have left the site.
Regan commented on the hazardous fire as he was announcing proposed vehicle pollution standards so stringent they would ensure that 2 out of 3 cars sold by 2032 are electric. In Washington, Irv Chapman, Bloomberg Radio.
President Biden is in Ireland visiting the town of Dundalk, near where his ancestors once lived before the famine of the 1800s.
In a sense, I know why my ancestors and many of your relatives left during the famine. But when you're here, you wonder why anyone would ever want to leave.
Biden arrived in the Irish Republic after a brief stop in Northern Ireland, where he marked the 25th anniversary of the Belfast Good Friday Agreement that ended 30 years of conflict in Northern Ireland between Catholics and Protestants. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Turned out to be a down day for the Dow, the S&P, and NASDAQ. CPI Wednesday, and the data showed inflation moderated, but was likely not enough to forestall the Federal Reserve from raising rates one more time this year. As for the market outlook, Brenda O'Connor-Wanis is financial advisor at UBS Global Wealth Management, and she was our guest right here on Bloomberg Business Week.
In terms of risks, we are looking at domestic risk for the first time in a long time. We're not focusing on Ukraine. We're not focusing on China. We're focusing on the knock-on effects from the banking crisis as well as the debt ceiling.
Today, the S&P fell 17 points, down 0.4%. The Dow was down 38, down 0.1%. NASDAQ down 102, lower by 0.9%. 10-year yield 3.39%, but the 2-year yielding 3.96%. Spot gold up 0.5% at 2014, and West Texas Intermediate crude up 2.1%, 83.28 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, check out this company's website, and they are making a promise to their customers. It's all about making gear for good, outdoor gear, clothes that are, in their words, as ethically and sustainably as possible, and then paying it all back. It's an idea that we know, we talk about, increasingly matters to shoppers and society at large. So let's get into it on the company, on the mission, and the outlook. Joining us is Grace Sunsick. She is Chief People and Impact Officer at Cotopaxi, and she joins us here in our Bloomberg Interactive Broker Studio. Full disclosure, we met at a dinner, again at a dinner earlier this year, and I'm like, you got to come on, you got to come on. How are you?
I'm doing well. It's so great to see you.
It's so great. Tell us about the company. And as I said before we got on air, you know, one of our colleagues was like, oh my God, I can't believe you're having them on. I love their stuff. Tell us about Cotopaxi.
Cotopaxi is an outdoor gear company that makes the majority of its products out of remnant, recycled, and responsibly sourced materials. So we start with that. But the most fascinating thing about Cotopaxi that draws people into the brand is that 1% of our product sales goes to the Cotopaxi Foundation, that's sole mission is to eradicate poverty in our lifetimes. So we're really broadening that definition of human sustainability to include people and society in ways that are new for the outdoor industry, and certainly new for the fashion industry at large.
Your supply chain, and you talk about sustainable, because before we got going again, like the fashion industry, not good on the environment.
Yeah.
How resilient is that supply chain? And talk to us a little bit about it and how it all works.
Yeah,
like where you're supplying from.
Definitely. So we are supplying from, global markets, like many retailers are. The way in which we make the products out of this remnant, recycled, repurposed material means it's less resource intensive, it's less water intensive. It results ideally in less waste because of the quality of the product that we're bringing to market. And we're very transparent. In fact, less than 1% of our net revenue is attributed to the carbon impact that we have on our brand. So we measure it, we're transparent about it, we own it, and we have a phenomenal product design team that's always looking at new and better ways of making great products out of remnant material.
I love that so much, and I feel like when I've spoken with other CEOs, they always talk about the importance of partnerships in achieving those goals, and I know you partner with the IRC, other big organizations. How critical has that been to your success in achieving your goals?
It's been huge. How we define sustainability, we think about it as human sustainability, to meet the needs of the present without compromising the ability of future generations to meet their own needs. That's a much broader remit than just thinking about the environment or climate change or global warming. It involves people. And so when we think about our impact partners, we look at outcomes. We look at the organizations that are really driving outcomes, whether it's in access to water, clean water, if it's fighting malaria, which has only grown with increased temperatures and spreads of diseases in impoverished communities. We look at education of young girls, the things that we know that are proven to result in outcomes of alleviating poverty and getting people on a better track.
Grace, how easy or hard is this to do? Because, I think, and I can't remember if you and I talked about this a little bit, but I always do feel like I love companies like this. And I do think consumers increasingly want to shop and buy from companies like this. As a company, in terms of thinking about, okay, but you got to make money too, right? You got to keep the business going. So how easy or hard is it to have this mission and do good and then also make it a profitable company?
Right. So it is hard because there are trade-offs. There would be easier ways of doing things.
What's the biggest trade-off?
Well, I think the biggest trade-off is probably being more intentional about that product supply chain, Renee, how we're making the product. And we could probably have shortcuts or other ways of doing things.
Right.
We would rather do it right. But I think one of the biggest trends that's happening around ESG that's fascinating to me, at least, is the rise of the public benefit corporation, where the best interest of the corporation historically has been thought as maximizing shareholder value. But public benefit corporations allow for this broader discussion on stakeholders, and they include society and environment. So we have a board, we have a management team, that we are a public benefit corporation. Cotopaxi is a public benefit corporation, and we have the legal structure that actually enables us to behave this way. And oftentimes you see ESG put in a corner, put in a department, maybe it's a part of marketing or a part of the brand, and it's not integrated in the business model. And that's what I think is so
Hence
exciting.
all the greenwashing that people keep talking
Well,
about.
that's right. And that's what I think is so exciting about Cotopaxi. It plays a role in our recruiting and our retention, getting people on board to be a part of something that's truly bigger than ourselves.
I was going to ask about exactly that, because I've also heard from different employers that talent retention and climate goals are directly linked, because young talent, they just won't sign on for a job where that's not part of the business mission. Are you hearing that from the folks that you hire as well?
Oh, absolutely. And I think, to be honest, I think that's what draws a lot of talent to the outdoors industry in general. We have a pretty good reputation for being leaders in that area. But what's unique about Cotopaxi is it's creating, through its color and its optimism and its joy, a much more inclusive approach to this as well, and attracting underrepresented communities to kind of join us and have the outdoors be a greater part of their life.
That's not always the case, because sometimes the outdoor industry can be a little exclusionary to diverse communities in particular.
Right. You see someone that doesn't look like the three of us here, you know, scaling a mountain or doing something heroic, and you say to yourself, well, I can't be a part of that. So Cotopaxi's brand mission and brand goal is to allow for adventure to be anywhere in all different types of forms, and that we can do good everywhere together.
All right, so you know we're Bloomberg, so I'm going to ask you, I mean, what's kind of the conversations you guys are having about the current kind of consumer environment, economic environment, market environment?
You know, internally we talk a lot about, you know, how can we preserve our growth? I mean, Cotopaxi was very lucky last year. We grew nearly 100% year over year in our top line. There's something that we're doing that's working. And so we want to double down on that. We want to be true to our core values and be mindful and sensitive about dynamics that are, you know, out of our control. You know, we air freighted, you know, some product, and we didn't like doing it last year. We're going to be doing it less of this year. And I'm looking at opportunities across our supply chain to have that impact that's true to our mission and our vision.
And it's global, you say, right? And your supply chain.
Yes, we work with suppliers all over the world in designing our product, and we empower our workers that are affiliated with our brand, in our supply base, to make, you know, even better design decisions around our products. The Del Dia bag, which is known for its bright colors and its remnant material, is often designed by the workers at the site. We empower them to come up with the designs and the way things should look. So we have a smaller supply base, kind of a concentrated group of suppliers that we work very, very closely with. We'll work with them on insetting projects. We've done, you know, organic gardens and different sorts of projects to improve the quality of life, living wages, and working with Fair Trade USA to certify some of our suppliers to uphold their standards as well.
And I guess what I was curious about, though, in this line of questioning is it getting easier, meaning that there's more, you know, entities out there around the world that do have a sustainable mission, or thinking about their impact on the environment, impact on people? Are there more out there that give you more choices? Is that growing?
I'm going to be optimistic and say we're moving in that direction. And I think in the outdoors industry,
tough, right?
It's still tough. But in this industry, you're seeing a lot of great brands come together to try to, you know, grow the pie and work together to create solutions, which I'm really optimistic about, and that's where Cotopaxi plays.
I think that's so cool. And I also wanted to talk to you about like inflation and consumer demand, but we're a little low on time to get into all of it with you.
Is inflation still a problem for you guys, real quickly?
Oh, for sure. And I think that we look at pricing and we look at what's reasonable to charge for a jacket or a coat or a pack. We've always been, you know, really thoughtful about how we manage the P&L, how we manage cash. We've been profitable for years, which is sort of less heard of in a high growth consumer business. And we've been super, you know, kind of sensitive to passing along any increases that we're having to our fans and our consumers as well.
So much fun. Come back soon.
Thank you. I will. Thank you for having me.
So good. Grace Sunsik, she's Chief People and Impact Officer at Cotopaxi, joining us here in our Interactive Brokers studio. You're listening and watching Bloomberg Business Week, and this is Bloomberg Radio.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Emerson Electric is acquiring measurement services maker National Instruments in a deal valued at $8.2 billion following a long pursuit. Shares of the acquirer move lower today. Emerson down by 1%. Shares of the target, National Instruments, up today by 9.7%. ConocoPhillips CEO Ryan Lance is predicting more shale mergers and acquisitions amid a dearth of investment in the industry, but his company will not be taking part unless a highly compelling deal is on the table. Now, Lance spoke this morning with Bloomberg Television.
We feel great with the portfolio that we got, and that's what we outlined today, was a portfolio that's durable, that's diverse, that's got some depth in inventory, and we can go for a long period of time. The best time to is when you don't have to do anything. We don't have to do anything as a company. And in fact, the hurdle is quite large for us. And it's really tough to transact at this point in the cycle with the commodity price the way it is and get something that works for both the buyer and the seller.
Indeed, crude oil today closing above $83 a barrel, specifically West Texas Intermediate crude. ConocoPhillips shares up by 0.7%. Shale producers did surge Monday as traders bet they could be potential takeover targets for big oil companies looking to expand after ExxonMobil's reported interest in Pioneer Natural Resources. Shares of Pioneer Natural Resources up again today, advancing by 2.1%. And those are some of the company stories that we are following for you at this hour. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
I'm Madison Mills here with Carol Masser on Business Week. We've got more to come, but first, let's get a check on the latest world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in D.C. Hey, Nance.
Thanks, Madison. Indiana authorities say it could take more days to extinguish a toxic fire that's burning at a recycling plant in Richmond, Indiana. It's forced the evacuation of hundreds of nearby residents. Those outside the evacuation area are being told to shelter in place and turn off their heating, ventilation, and air conditioning units and keep the windows closed. Richmond Mayor Dave Snow says the plant's owner ignored citations for unsafe business practices and for creating a fire hazard.
That business owner is fully responsible for all of this. We have the unsafe building order and the recorded court documents, and everything that's ensued here, the fire, the damages, the risk that our first responders have taken and the risk these citizens are under are the responsibility of that negligent business owner.
Again, Mayor Dave Snow. Fire officials say the burning plastic has created a smoke that's definitely toxic. The EPA is there and is assessing the dangers. The judge presiding over a defamation case against Fox News says he'll likely order an independent review to determine whether the network improperly withheld evidence, a step that could lead to sanctions. The defamation trial, is scheduled to start tomorrow with jury selection. Dominion alleges Fox damaged the company by repeatedly airing false allegations that its machines rigged the 2020 presidential election against former President Trump. Well, Donald Trump wants a 4-day delay in the start of a civil trial over his alleged rape of author E. Jean Carroll. His lawyer says a cooling-off period is necessary following his indictment in the case of hush money payments. The trial in the Carroll case is due to start April 25th. And the former president could have another opponent to face in the presidential primaries. Senator Tim Scott of South Carolina has launched a presidential exploratory committee. Scott is one of 3 black senators and the only one who's a Republican. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
You're listening to Bloomberg Business Week. It's now time for Wall Street Daily. David Weston speaks to the top names in finance and economics, taking on the week's biggest issues on Wall Street.
It is time for today's Wall Street Week Daily segment, and with the backdrop of the IMF warning that the U.S., China, and other major economies need to do more to address debt levels that are set to rise to near record highs in 5 years, we've got those 2023 spring meetings of the World Bank and IMF underway in Washington, and with that, our David Weston spoke with the Peterson Institute senior fellow Mary Lovely about China's response.
They've been holding out because they didn't want to take what they saw as an unfair haircut, that is cutting the value of what was owed to them, when the same would not be done by the multilateral development banks. And there's a lot involved, the World Bank, the IMF, the African Development Bank, the Asian Development Bank. So they were holding out, but Sri Lanka's in default. China may see that it's not going to get all of its money out. And so the best thing that it can do is to try to get some of its money out. So the reports are that China wants to ensure that grants and other forms of aid will be forthcoming once the restructuring is done, if they take the haircut. And so that would help to ensure that